What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy.
All right, Evan, I think we're going to go ahead and get started. It's 9:21. Welcome in the 100 plus people that are already in here for Good Morning FinTwit. Today's going to be an interesting episode. I think we're going to really focus in on some live opportunities today as we're going. When we get to 9:30, I'm going to drop a thread and ask people to document their live trading there. So hopefully we'll get a bunch of ideas, tickers, things along those lines. We're just going to keep it a bit more rapid charting. Just want to keep the energy up for this morning. So let's kick it off with some breaking news from the weekend. And then once we go into market open, we'll just be getting pretty active. Okay, Evan, stock market news, all you.
Yes, sir. Awesome. All right, I'll keep this as high energy as I can. I am excited for this week in the market, even if it is going to be red. Long-term investor, I'm just going to DCA in at some point into the names I like, probably after earnings. I'll let the numbers come out as always. But yeah, I'm excited for that. But enough of that, getting right into the news stories from this morning and this weekend. Fubo TV, I know it's a very popular stock on FinTwit. They acquired the exclusive rights to show UEFA national team football and UEFA European Championship matches through their Fox Sports partnership. They had the exclusive rights to that, and it was select games. We'll see what that does going forward. Kohl's, ticker KSS, many of you guys will know them in the department store. They confirmed that they received letters expressing interest in acquiring the company. I know the stock initially shot up. It's one of the few names that probably is up today. Let's check where it is. I saw it was up 32%, so we'll see on that. Moving on, Fedex and Microsoft announced today a new cross-platform partnership to sell a logistics as a service to retailers, merchants, and brands. This isn't a brand new partnership for Fedex and Microsoft. This is a part of their ongoing deals to work together, but another new product coming out of both of them together. It seems like a very similar, a very Amazon-type logistics as a service product, but we'll see. DraftKings said this morning they're going to be reporting their Q4 earnings before the markets open on Friday, February 18th. Gerg will like this. I just got a notification on my phone that ARKK just hit a 52-week low at 68.60. So there you go, Gerg. I know you're happy on that. Panasonic this morning, they came out to say they're going to invest. I believe the number was $600 million or something around that. I don't have it in front of me. I apologize. To start mass producing the next generation of Tesla batteries in 2023. Batteries are supposed to have higher range and better efficiency. Continuing, these are some of the stories from last night that I saw. Wynn Resorts is reportedly looking to sell their online sports betting and gambling business, WynnBET, for a reported $500 million. That's according to the New York Times. They had previously, about a year ago, been floating around a $3 billion valuation. So we're quite the ways under that here, but that has a lot to develop coming out. Netflix, this was known that Squid Games would be coming back for a season 2, but I did see a quote from the earnings call last week from the co-CEO Ted Sarandos that the Squid Game universe has just begun, and that was a direct quote. So for all you Netflix and Squid Games fans out there, we got a lot more stuff coming in the future. Activist investor Blackwell Capital. They reportedly want Peloton to fire the CEO, John Foley, and explore a sale of the company, and that's according to the Wall Street Journal. I know there were some unfounded rumors last week, I'll call it, about Apple maybe circling around Peloton, which was definitely seen nowhere, but still the sentiment is
Just
out there
one
that
page that you mentioned right there.
no, I won't say it. We don't got to say it. We know. Keeping us moving. Elon Musk's Neuralink. I know this isn't a stock, but people do tend to love that guy. They are hiring a clinical trial director. So they're getting closer and closer to implanting some stuff in people's brains. Now, we got a huge week of earnings this week. I'll keep it to the top 3 that in my mind, from my perspective, Apple, Tesla, Microsoft, give you some expectations for those, but eWhispers, Earnings Whispers is a fantastic website to see all this stuff when it's happening, a lot of the information, but it's available a lot of places. So the first one out of those 3 will be Microsoft, which reports after the markets close on Tuesday, tomorrow. Wall Street is expecting EPS of $2.32. That's non-GAAP. That's up 14.3% from last year, and then revenue of $50.78 billion, up 18.1% from last year. The next one out of those three reporting is Tesla, which is going to go on Wednesday after the markets close. Of course, we already know the delivery numbers, so you kind of get an idea of where this quarter is going to go. But EPS is expected to come in at $2.36. That's up from EPS of 80 cents in the same quarter last year. And then revenue of $16.65 billion. That's up 55% year over year. And then the last one out of the three, Apple, reports after the markets close on Thursday. Wall Street is expecting EPS of $1.88, up 11.9% year over year, and then revenue of $118.31 billion, up 6.2% year over year. And then before I hand it over, I don't actually have this in front of me. I know Halliburton, which will have some decent coverage. Some people who care about it. They reported earnings this morning. I just want to get the numbers for you guys. EPS came in ahead of expectations for Halliburton by 2 cents. EPS was $0.36. And then revenue came in as a small beat as well at $4.28 billion, beating expectations of $4.09 billion. But yeah, I think they also actually raised their quarterly dividend from 0.045 cents to 12 cents per share. But that's decent coverage enough on Halliburton there, ticker HAL, if any of you guys do care about that. But yeah, Gav, I think that is a decent coverage on the news stories for this weekend. I'll throw it back to you for the markets open.
Okay, perfect. So looking here at market open, I think we're going to see a good amount of action off the bat. Which way that goes, TBD. I'm personally going to be watching for some of the larger call flow and puts right off the bat. So just looking on a couple of services, and we'll kind of shout those out as we're rolling. I also want to make today a little bit more active with our speakers. So Danny, Matt, Gerg. I also see Dan Nathan in the crowd. If you want to hop on up here, feel free to. And essentially, just like if anybody's placing a trade today, I would love for that to be, actively spoken out. Okay, Stock Talk's here too, which is perfect. And just, explain, what you took, why you did it, and just kind of give it at the moment. Throw that hand up, if somebody else is talking, and we'll come right into it. I think will be the best way to go about it. I'm also going to go ahead, and I drafted this previously to make this a little bit easier. But what I'm dropping right now is a live trading thread, and I'm just going to put this out, and I will pin it to the top of the space. And essentially, if anybody places anything, we would love to have you basically just drop, what you took right into that thread that is up top. That'll just make, life easy. We'll see that. We'll use that as a point of conversation and a point of topic. But we got 2 minutes until market open. Our other co-host for today's Stock Talk Weekly just joined us. Stock Talk, do you have a minute to kind of explain what you're looking at going into the open? Might take a minute as he comes up to co-host. I saw you on mute for a second. Obviously, for anyone that's watching, we're already pretty far. There we go. He just came up to co-host. All right, Stock Talk, can you hear me?
Yep, I can hear you. What's up?
Perfect. We're about to hit market open. You want to give us what you're looking at going into market open, and then we're just going to rapid fire around everybody.
I'm off the open, going to want to see this reaction, see if there's any dip buyers. I'm not expecting there to be any sentiment or heavy bid sentiment. We might get a couple bounces during the day, but I really think, these geopolitical tensions we're getting are mistimed, to say the least, at least for bulls in the market. Any bulls in the market right now, I think are trying to find any justification they can to say, look, the reaction from interest rate hikes and, potential quantitative tightening either at the end of the year this year or start of the year next year, part of that reaction is getting baked in. But now we kind of seeing that, compounded by these geopolitical tensions. I mean, a lot of news coming out this morning about Russia mobilizing forces in a variety of ways. There's some reports that came out about the Russian Navy going on quote unquote drills. There's some leaked footage that's circulating around now. Not sure how legitimate it is about, Russian missile systems and vehicles and infantry moving closer to the border. But we don't know, how much of this information is reliable, how much of it is, being spread by either side. But either way, it's going to affect sentiment. And it clearly is, right? There was a report this morning that was circulating about JP Morgan closing long positions on the ruble And so, I think there's a lot of reactionary sentiment, and it's kind of, compounding the reaction we expected to see anyway, going into, the Fed rate decision on Wednesday of this week. I kind of expected this to be compounded anyway. And so I think that's part of what we're seeing, but I'm not going to rush into any decisions off the open. One day trade I am looking at, I mean, obviously a lot of charts are broken down. So, if you're hunting for puts or downside opportunities, there are a lot of those. But what I'm particularly looking at is DWAC, which is a SPAC that a lot of you are familiar with. It gave up that 67.50 level in pre-market. So I'm looking at it pretty much right now for puts. I think there's a lot of downside, at least to 61 immediately. And I mean, this stock is really up on thin air, no matter what you think of the product or what you think of Trump Social. This stock is really up on thin air and sentiment and hype. And I think those stocks tend to fall the most during times like this. And so I'm not jumping into them right away. I'm kind of seeing it. There's a couple dip buyers here now, and I'm kind of watching the Qs as well, more so than SPY today, because I think we've seen more reactionary moves on the Qs than we have with SPY, and steeper moves and more chops. So focus on the Qs today, and going to be looking at potential DWAC short, depending on if the dips are getting bought in other speculative names, then I'll probably opt out. But if not, if this ticks lower than the pre-market lows, I'm going to start eyeing those puts, and then looking at those and a couple of other names as well. I mean, I see QQQ getting bought up here, right at the open a little bit. So keeping my eye on that. Again, not rushing into any moves. I'm happy with the hedges I have. I think they'll perform well today. I rolled my Lucid puts out from last week and just covered a bunch of them at the open, which I'm glad because the dip's getting bought there. But I'm going to stay hedged on that position as well. So that's just a general overview of what I'm looking at.
Perfect. Thank you, sir. And thank you to those who are already sharing some of their trades as well on that trade thread. I see some people taking puts on a whole bunch of stuff, the VIX, PLTR, and more going on. Okay. Danny, what are you looking at open?
Right now, I'm just managing puts, SPY puts that I held over the weekend. Yeah, I'm not looking for anything right now. I don't like when we gap down. I want to see, do we get a gap close? And what happens at the gap close? Do we get a flush back down, or do we get a more of a breakout to the upside? Right now, what I'm doing, and I mentioned this on the last space, I don't like to pick individual winners and losers when we have events like this. I like to just short the indexes. So that's basically what I'm looking at is breakdowns of key levels. At this point, what I'd be looking to do is take SPY short under pre-market lows, which looks to be about 430, 70, give or take. And then I would look for possibly close to in the money puts to the downside for Wednesday's expiration. I already have puts for today that, like I mentioned, I was holding overnight that I closed a little out. What I'm also watching in events like this, I like to go down to the 5-minute chart, and I'm just looking at that 21 EMA to the downside. I want to see, as let's say SPY or the Qs come back into that 21, if I see weakness, I short it right off of that, the bounce off of that, and then I'll use that as a stop loss. So if we get like a 5-minute candle close over the 21, I'll close out those day trades. But right now we're just seeing a little indecision. It's only 4 minutes into the market open. I like to wait at least another 5 or 10 more minutes to see where we're at. But right now it's just really choppy with the gap down. And again, just to reiterate, I'm not necessarily looking at individual names in market environments like this because, you can get big moves to the upside, big moves to the downside on individual names. I'm more focused on the indexes right now. But if you are looking to the upside, I did post a bunch of charts over the weekend. I think consumer staples and defensive stocks are for me the way to go. Consumer staples because, think about like your Kraft Heinz type companies, your Pepsi, your Coca-Cola. They're not sexy plays, but guess what? Look at those charts. They're pretty green. So that's where I would look. And then from the consumer defensive standpoint, think Northrop Grumman, Raytheon. That's all about the geopolitical issues that we're seeing. So anytime you see like these Cold Wars heat up a little bit, look at the defensive sector. Those are the names that you generally will see a bit of an uptick on. And there's a couple of those charts. And again, I put them out. If you look in my Twitter stream, I put out probably 3 or 4 defensive names. I think Raytheon, Northrop Grumman, Lockheed Martin, those types of names. A couple of those charts look really, really good. They're just consolidating and setting up. So if things start to heat up, and again, this might be defensive posturing, you don't know. I'm actually was in the military, so I know all about these drills, especially with the Navy. They always run these things. And so, you have to understand that the media is going to use these events to, drum up a little more fear. And there's a saying that we use, FUD, fear, uncertainty, and doubt. You more attribute it to the crypto markets, but you can attribute it to the regular markets as well. And so it's like the market's coming down. They're just going to beat it down even more. They want it to come down. They want cheapy XYZ stock. That's just the nature of the game. And now is the time for capital preservation, mental preservation. Just chill out. Let the market do what it does. I see a broadening formation forming here on SPY as I'm talking. So, let the market do what it does, but don't try and buy dips, because dips get dippier and dippier and dippier. And the next thing you know, your dip buy is now down 50%. So just let the market bottom. This sell-off was coming. We all knew it. Nobody wants to acknowledge. Well, not nobody, but a lot of people don't want to acknowledge it. But this is just the reality. So, and just looking at this NOC, Northrop Grumman, they're up about 0.5% today, right at $400. Pepsi up about 0.2% at 174. So, consumer staples and defensive stocks. That's what I was saying.
Perfect. Thank you, Danny. Okay. Matt, I see you just posted a picture of SPY with some key levels drawn. Do you want to explain that?
Yes, sir. Good morning. Let me mute some music here. Yeah. So right out the door, the first thing we look at is we kind of span out a month to see where the risk is distributed for next month's monthly option, since we just rolled out of this one, and things are not looking super hot right out the door. It does. This is almost like a gap and go type setup. Like it opens and it's likely to fall a little bit more. That little arrow that I drew at the bottom, that kind of upside down V, is what's expected. So SPY 435 today is how the risk is distributed, as in it's likely going to try to even fill the gap and not achieve and probably still fall. This is probably the worst open that we've seen as far as SPY goes, probably in 2 years since COVID. So the setup is not good at all, and it's probably going to get worse for today. Still looking at some of the numbers, looking at some choice tickers. This just happens to do with a little overshoot from what we saw going into the end of last week. People are still kind of getting out of the way of some major earnings, some major, FOMC. We have a lot of stuff that could possibly spark a catalyst. But this is also my lower target that I wanted to see hold, which is 4301. That was my call from last week, probably to bottom out in the SPY. Or the S&P. I saw a couple people also posting similar targets with using different methods. And I think a lot of people agree this is a very key level, that if we lose this, then it's almost like the groundhog sees its shadow for, another month or two. But I hopefully expect this to be where it bottoms out if I were to pick something. So it's probably going to chop around here all day and hopefully doesn't do much. There's a lot of big earnings coming out this week. So it usually what you see people is get to the sidelines in moments like this before earnings. They'll kind of get out of the way. But there's also a lot of people that are short, that it's already pricing in what's expected. So it could very much be that we rip around and turn into a dead cat bounce today. And it's kind of what today or tomorrow. And that's kind of what I'm hoping to see. I'm just not betting on it yet. So what I do, where I drew on that trade, on that chart that I posted, that the confidence of it breaking into the top side would be at that 442 level. Everything else is just resistance to 440 today. And so I wouldn't expect a reversal, but if we did get one, it almost needs 100 points for me to even want to tack it long. So I'm not grabbing any knives. I'm not jumping in any volatility. I'm just going to kind of let it stabilize. Again, this is my strategic sit out and kind of let it play around a little bit and not try to make a decision from here. So that's kind of where I am right now. If you have any tickers, you want to post anything up, let us know and we'll take a look at it. And just still kind of running the analysis. But then it's not a good clean open. I kind of hope for a little bit better, but that lending club, right? How about that trade? That call of yours.
Definitely drop us one for lending club. So right now you're saying 430 as resistance?
430
support?
Yeah, so 4301 and a half. I know it's on specific, but just about this area, 4,300 is very key. That level is almost like if we break that level, that's what I posted last night. It can get much worse. It can get 500 points much worse. So not today, of course, but over the long haul. I really do think that this consolidation that we had from early October, that there was a huge turning point there. We had a massive breakout and a lot of accumulation starting essentially that led to the final wave of shorts getting into cover. So there's a lot of basically it's illiquid there. That's the problem. And so if it doesn't hold, being illiquid with not a lot of positions still there, as in, again, we're running our monthly numbers, there is no support, period. So if it doesn't support, it's almost like tissue paper. Yeah. So
yeah, that'll be interesting to see. Okay. Keep an eye, everybody, on those key levels outlined. Okay, real quick, I do see we were able to get Dan Nathan up here this morning, which is pretty exciting. Welcome, Dan.
Hey, how are you guys? Great conversation so far.
Doing good. Thanks for tuning in. Would love to hear your thoughts on what's going on in the market right now. Evan, did you have a question or are you just waving?
No, dude, I fat fingered and hit the hand up button instead of the wave button.
Okay.
We were just waving at Dan. So
what's up? Waving back. I'm never good at these emojis on the Twitter Spaces, but you guys know I love dropping into your spaces. You guys, I love hearing from so many kind of diverse backgrounds, traders, investors, crypto folks, and everything like that. Listen, I heard someone just say this. It's like a lot of people expected this, and a lot of people did. And it's really hard to kind of figure out how to position in these sorts of environments because no one knows. You can look to technicals, and I think the levels I just heard made a lot of sense. Looking at like the Nasdaq 100, well, we just blew through that low from early October, so maybe we're focused a bit more on that breakout level from June or so, which is not too far off. I think you guys were quoting the ETFs like the QQQ, for instance. What is that, 340? It kind of better hold there. I think the earnings week and the Fed week makes it a fairly treacherous setup, but it also makes for the potential of a very sharp rip, right? Like think about into Fed Chair Powell's reconfirmation hearing a couple weeks ago. Everybody was pretty well convinced that he was going to kind of stay the course on his hawkish kind of tenor that he had over the last few weeks or so. He did, but we had that huge rally. Now, what I'd say about that is like for some of the people, and I know I've been on these with you guys who have hosted these things before, a lot of when we talked about this, a lot of you guys have not kind of sat through what like a protracted bear market looks like. I think if we go back to 2020 in the beginning of the year, February and March, that was the quickest 35% peak to trough decline I think the markets have had, ever. But we were back, to those breakdown levels within, I don't know, 3, 4, 5 months or something like that. Then it was off to the races. And so my career is kind of littered with, bubbles inflating and then, deflating very hard. The dot-com like bubble, when that burst in 2000, no one really knew we could be bursting a bubble right now and we could go on for, lower for a year or two. What does that look like? It looks like sharp counter trend rallies and then new lows and then, so kind of a 1 step forward, 2 steps back. And that went on literally from the highs in March of 2000 to the lows in late 2002. And then the other time was the financial crisis, from the highs. People forget the highs were put in late 2007. And we didn't bottom until 2009 in April. And that, guys and gals, is just a nasty environment. It's not even good for trading. And I don't know what you guys have to say about that. So the difference that was about with the pandemic in early 2020 is that the fiscal and the monetary stimulus was unheard of. It was, as you guys know, trillions and trillions and trillions of dollars. And so that's the bubble that's being unwound right now. It's in valuations, whether it be equity valuations, whether it be valuations in crypto. If you can do that, you have to be pretty skilled to do that. And those are the things that's really hard to figure out because, for months and months, I was screaming about, we're talking about $200 billion market cap companies trading at 25, 30 times sales. You look like a jackass because they go to 35, 40 times sales. Some of these names, much smaller names that we're trading at those levels. But now that premium is coming out. And just as we overshot to the upside, who knows how low we can go to the downside. Does that make sense to you guys?
Yeah, there's clear, downside after that huge run up.
Yeah, so I guess my point is, I was on Fast Money, I think it was like a week ago, and we were talking about some of the devastation in the Nasdaq, with some of these stocks down, 50, 60, 70%. And somebody, one of the panelists or the host, mentioned the fact that, well, the dot-com bubble, Amazon sold off after that, 85 or 6% from its highs. I think there's plenty of stories that might resemble what some of those like internet e-commerce sort of names resembled in the late 90s and 2000, but I just don't think we're going to see that or anything near that in any of these names that we know and love, the names that you were just talking about. But make no mistake about it, when you see a Netflix trade off 20 some percent and then down 5% today after already being down, 20% from the time, you really have to take notice. I'm looking at Twitter, Snap. These stocks are down more than 50% from their 52-week highs. These are real market cap companies that people felt generally comfortable with the valuations, right? So I don't know. I mean, I feel like this is the time where you get your kind of buy list ready. I was just going back and forth with someone close to me who's not really in the markets, and I've been kind of a Sherpa on some of the crypto stuff. And she's like, should I buy more here? And I was like, yeah, you should buy more here because you're buying more, a week ago, that sort of thing. And it really depends on just how you kind of scale into positions. And for me, I never go into a position all in. I know you guys talk a lot about sizing on these spaces, but I'm always prepared to kind of like dollar cost average into something. So pretty soon, I think you'll know it's going to feel like really overdone. Maybe today's the day. I think it'd be really hard to have a reversal day. That the last panelist who was just speaking about some of those technical levels. When you have the sorts of breaks that we do, the idea that we would reverse, a move of down 2% and close up meaningfully, we probably have to have one more down day, is my guess, into the Fed, and then you'd probably see some covering. And the other one would be like a Microsoft. So Microsoft, if you look at they're going to report tomorrow night, and I like to keep an eye on implied moves in the options market. I don't know if you guys talk about that at all, as far as into earnings expectations, because it just gives you a sense of just the kind of the level of fear. I mean, there's other ways you could back into it. You can look at implied volatility, you can look at premiums, you can look at. For me, it's pretty simple. I look at the at the money straddle, let's say in the weekly, and I'm looking at the stock at 290 right now, and let's call it about $20. You guys could do that math, right? 20 divided by 290. That's the expected move this week in either direction. And then you go back and you look at historically, how much has it generally moved? A name like Microsoft will generally move probably far less than what's implied. But in a market like this, we're in a fast market, valuations are being compressed. We've gone from glass half full to glass half empty when it relates to fundamental news. And, this is kind of how, you kind of get bottoms in sentiment where you just have a, baby with the bathwater. You're starting to hear that a lot, right, guys, with your altcoins, with a lot of these SPACs, with recent tech IPOs. And, so I'm just kind of looking for relative price action to expectations. That's why I like to look at, implied moves into events. And then the other one, what I would say is like, let's think about what's implied on the weekly move in the S&P with a Fed meeting like this. If Fed Chair Powell changes his tune at all, okay, and this is the one thing that a lot of people will go back in 2018 when they were raising rates. They were raising, I think Fed funds got to about 2.5%. The 10-year U.S. Treasury was a little north of 3%. Stock market sold off 20% in Q4 of 2018, and the Fed made a very dovish move, or at least jawboning. And might he, take a more dovish tone? He could, if they're really worried about the stock market. But again, what are they there to do? They're really there to battle inflation. So that's something I'm keeping a very close eye on also.
Well said, Dan, all around there. I agree. We have to look out for the things like inflation. We also have that FOMC meeting, or the Fed meeting, later this week. Are you kind of factoring in that into the week overall, I guess, with kind of all these major earnings as well? I actually wanted to ask you, we saw last week one of the first banks to report with Netflix, where there was just a massive drop off, and I haven't looked at it yet today, but I can't imagine that it's having a great day. Yeah, down another 6.5%. How do you think that, with these FANGs and earnings and kind of the perfect storm things can really see the bottom drop out here.
Yeah, I mean, listen. So you hear that expression? They always shoot the generals last, right? So we've seen, these kind of work from home, all those from home names. They've just been devastated, right? You've seen SPACs just destroyed, bludgeoned. You've seen recent tech IPOs. They've been going down. All those things. Crypto now, for a couple of months here. So the last thing to nail would be the Microsoft, the Apple, the Google, the Amazon. I mean, Amazon has already gotten destroyed. I mean, look at Amazon; it's down more than 20% from its recent highs. Microsoft. You guys tell me, when's the last time you've heard the words Microsoft down double digits on the year? Very briefly in early 2020, but that stock came back, obviously pretty quickly. So, I would say that if you see Microsoft and Apple and Alphabet down 20%, that's probably 20% from the recent highs. That's probably where you step in and buy. In my opinion, this is my playbook here, guys, rather than buying like idiosyncratic risk of one name. And maybe you guys do that better than me. But I'd look to the QQQ. And the reason why is that the top 6 names make up nearly 50% of the weight. And so if we finally have those top 6 names in massive correction territory, and we know what dozens and dozens of stocks in that index of 100 have absolutely been killed, then that's where I kind of want to step in. So I might start picking, if we can hold, I'm just looking at the QQQ at that kind of like, let's see how it acts at that 341 level. That was the 342 or so, which we're not far away from, but that's that breakout level from the summer, if that makes sense. So that's how I'm thinking about those earnings. I would love to see Apple and Microsoft report really good results and sell off because of it. So that would just tell you that we've gone from glass half full to glass half empty, and that's the sort of sentiment shift keeping a really close eye on. Now, if one of those guys comes out and gives really bad guidance, then it's over. I mean, like, it's just like the bull cycle in these mega cap growth stocks, it's just over. I mean, that's, when I say it, and then everything needs to be re-rated, and then time is the thing that everyone will need. And I know that there's a lot of traders, on this call. I mean, listen, guys and gals, trading's hard. I mean, trading's hard, especially if you're a bull market trader. If you buy dips and that's all you've been trained to do. Shorting stocks is really hard, and especially shorting stocks in what might be a bear market, because the rallies, the counter trend rallies I just mentioned before, I mean, they really shake you out, right? And so I think we're probably in a 1 step forward, 2 steps back sort of market for the time being. And then I think it really is time. The last thing I'll just say, and I know I've been talking a lot, is that a lot of new entrants to the market over the last 5 or 10 years, really, you did have a rate hiking cycle. It started in 15. We came off the zero interest rate bound. We stopped the quantitative easing, that sort of thing. But this is the first time that we were kind of hiking into, you ready for this, a slowing economy. And yeah, you could say, well, it's slowing because we had that rip roaring growth last year. But still, that growth last year with unusually low interest rates were the things that like gave a lot of investors the confidence of buying stocks, growth stocks specifically, at the multiples they were. So that's what's coming undone right now, if that makes any sense to you guys. And so rate hike cycle into a slowing economy where valuations were really high, where inflation is still there. I mean, I'm still looking at crude oil around $84 here, and I know that my personal view is that inflation expectations have just peaked. Like we probably just hit the highs there. So the Fed is kind of battling inflation by raising rates with unusually high debt loads at a time where inflation likely peaks. So that's also the thing that I think will be really interesting to see how it shakes out. And so that's why this Fed meeting is really important. And that's why earnings visibility of these big names is really important. If we don't really see good visibility saying that, near term input prices are under control, you got to keep an eye on margins, because the higher input costs for these companies, they have to make a decision whether they're going to pass through some of those increased costs to customers, which could hurt demand, right? Or whether they eat it. Either way, you're in a situation where consumer balance sheets get hurt, or corporate balance sheets get hurt in the turn of margins. So those are the things on the
cut out there for me a second at the end, but I think I got pretty much everything. Evan, do you have any questions on that? I also want to keep going around and seeing what else people have, what moves they've been making.
Yeah, only thing I really wanted to ask, from the Fed's perspective, it feels like this week in the market and kind of last week is really when we had this accelerated action moving lower. And a lot of the times, if the markets really do crash and burn, the Fed tends to kind of switch their tone and maybe get a little bit more dovish. We have no idea what's going to happen, but more or less my question is this has kind of happened over the last week only, really heading into this Fed meeting?
Yeah.
Is that like too short of a time frame for it to really be baked into this
I think
upcoming
so.
meeting?
I think they're going to have to address market volatility. That is not one of their mandates. You know what I mean, to do so. But if they change their tune because the stock market has sold off sharply since his last, then they lose a lot of credibility. And I think that they're really focused on kind of maintaining the credibility. I know this sounds really goofy. This is an election year, and they basically, have a new mission to battle inflation. And listen, inflation is something that people on both sides of the aisle, no matter who you are worried about. So I think it totally makes sense. They feel like I think that they've made the statement that the transitory language was probably incorrect. They should have been moving quicker. They should have come off of their bond buying quicker. They should have kind of signaled that rates were going to go up sooner than people expected. So I think that they really have to maintain their credibility. And I think that's also another good sentiment tell people is that if they basically stay the course and the market can kind of find some footing on that, well, that's good news. You know what I mean, too. So there's plenty of nuggets to look at. Hey, on the technicals, I'd also say, I'm just going to plug this, that Guy Adami and we do a market call. We're going to do it today at noon. Look on my Twitter at Risk Reversal, or look at MKT Call. We're going to have Carter Braxton we're charting on. We're going to chart a lot of the stuff that you guys are talking about. Carter is one of the best in the business. So we'll be talking about, all the major indices and maybe some single names and some of these big earnings. So check that out. It's at Market Call, MKT Call. Listen, I got to hop, guys. I love listening to you guys. I always appreciate you guys having me up. I'm definitely going to do it more crazy the last couple of weeks. So I really appreciate it. Trade well, people.
Thanks for coming on, Dan.
Thanks, guys. I appreciate it.
All right, take care. Okay, Gerg, I think you're the only one who hasn't had a chance to speak yet. What's your thoughts right now?
Yeah, what's up? I saw ARK at a new low, so I'm very, very happy. I think ARK goes down another 15-20%, so I won't be buying the dip on ARK. But overall, right, almost all the growth names are hitting new lows. Look at Snap, Amazon, Zoom, Starbucks, Docky, even Disney, DraftKings, Shopify. So I think we might pull back another 5-10%. And my main concern is, why are so many people panicking? If you go back last 40 years, almost every year we see a 10% pullback. And so far on SPY, we are down only 10%. So it's a bit overwhelming seeing people on Twitter freak out.
I assume the freakout's coming more from the fact that a lot of those smaller growth themes are down more like 60-70% and still falling, rather than looking at SPY.
I mean, isn't this on them for buying overvalued tech names on no theses and at instant multiples? People are paying 200 times earnings on, and so many zero revenue companies that were getting flooded via SPACs. So isn't that their mistake for people for buying them? Not the actual market, right? If you buy crap, that's on you.
My guess is a lot of them did not look at multiples.
Even now, right? If I look at my feed, I see just the same 5-10 names people want to buy, and they don't give a multiples. And I'm pretty sure most of them haven't even looked at a single multiple. They buy whatever's trending, right? So if you look at the Goldman Sachs zero revenue tech basket, that's down 60% from the highs back in February. But the only sector I see that's up overall from last year is the EV sector. I think EV sector might be the next point to have a big pullback, I think. Rivian is down 50%, but look at Lucid Tesla, right? I think Tesla might be next.
Tesla's having a major pullback today. It's kind of running towards that 200-day moving average.
That was my pick of the week for Tesla to the downside. I think that's going to happen after earnings. Gerg is completely correct.
I'm with you on that, but right, I'm expecting a bigger correction. Like Tesla is something I would never short, but I would only buy Tesla at 150 to 100 bucks. So almost a 60% downside.
Maybe I should have picked Upstart to the downside versus LC.
Well, upside is down like 17%, right? If I'm not wrong right now.
15.
15
Yeah,
so far, bro. Like when I called the top on this, I should have gone short. We should have the guy on, the Mark guy. What's his name? The Mark.
Minervini.
Yeah, I should have it on. Like the day he went on CNBC, that was the top. UPST hasn't gone up a single day after that interview.
Anyone look at Netflix today?
So for me, right, if I want to buy anything after the earnings, I tend to wait almost a week at least. Because the funds, right, that's a big position. They can't get out all at once, or they can't budget their all at once. So for earnings, 7 days is a sweet spot. So I would still not buy the dip. So the earnings were on 21st, right? So maybe what's 7 days after that? So 28th. So next week. If I want to buy Netflix, the dip, I would wait for Tuesday next week. But this week, right, like Wolf said, we have so many big earnings. I think today we have IBM, Logitech, and tomorrow we have J&J, GE, 3M, we have Capital One, TXM, Microsoft. On Wednesday we have Boeing, AT&T, Levi's, NASDAQ, Abbott, Intel, Tesla. On Thursday, Mastercard, McDonald's, JetBlue, Dow Chemicals, Southwestern, Visa, everyone's favorite Robinhood too, then Apple, and Friday, mostly boring names. Caterpillar, Chevron, etc.
What I really want to
Yeah, go on.
Yeah. What I really want to stress about that is I think a lot of people are trading a lot of these stocks, and I would just keep a close eye on implied volatility because a lot of implied volatility is well into 100% plus range today. So unless you get a massive move out of some of these, you're just not gonna make much off of the move. So you kind of have to catch the initial portion of it if you're taking something that has 115, 120% implied volatility.
For this, right, if you have any long equity, this is the perfect time to sell options against that. Like the IV is so high on all names. So like when you see elevated IV, the first thing I do is look at my long-term account. If I don't have any calls against those equities, I go and sell that because higher the IV, more you will make. Betting on the other side, right? So
it's definitely pretty crazy. All right, I want to see some trades that people are placing today. So, Gerg, have you made any moves today?
So far, zero. So far this year, I have made 2 trades.
Okay, I know.
And
Mr.
that,
Big SPAC guy.
Yeah, we can't go into detail, but you can see the strategy with that. With that, right, I buy these equities with almost no downside. I lever up and short the option chain on them. But for the first one, it did work. Second one, it didn't work. So far, I'm down 0.3% on the year. But I'm still confident with that. And my plan is to do this for the entire year.
Yeah, my guess is you're doing better than most. Okay, I want to get Stock Talk back into this and involved. Stock Talk, what moves have you made today? Probably mid-trade.
I think he bought some AMC, if I'm not wrong.
Yeah. You think he?
My bad. I thought I unmuted my mic. No, I haven't made any moves yet. I'm just being patient. I'm just watching the queues, kind of trying to see which names are responding when we do see bids on the QQQs, and then which ones are not. And so I'm trying to base that to, kind of just let this play out for a little bit. I mean, it's still early. It's only 30 minutes into the session. So I like to wait at least an hour before I make a judgment call for the day. But like I said, I am eyeing DWAC puts. I am in Lucid puts, which are finally in the green. I took some losses on the 121 puts from last week because the IV just burnt out, but the theta burnt out. But I mean, for these, the 128s that I had, I rolled them out into February. And that was a good decision, I think, because we just hit that 35 strike that I bought, which was, very far from the money price when we bought them, which was, the stock was trading at like 42, 43 then. So yeah, I'm just watching right now. I'm not going to make any crazy decisions with regard to going long or short anything. I think it's pretty choppy and driven by all the political tension. So just watching for now.
Cool. Yeah, I mean, everything that I'm getting alerted on has been pretty bearish. Well, I just got actually alerted on Apple to the bull side. Looks like some money came in, I guess, on some sweeps and stuff. What was this, 10:05? Yeah, I don't know. I'm not really like doing too much there. Twitter is actually more people are hammering puts on Twitter. Surprise, surprise, the big money actually ends up doing it. So you can kind of look at Twitter right now. There's just more people sweeping into these puts. The only move that I have made, because I feel like I got to put a little bit of money where my mouth is I did take LC puts. They're currently up about 7%. So hopefully LC just continues to die. Basically, I was just waiting for confirmation on LC. If you look at the level where it is at now, so this is Lending Club for anyone that's in the crowd, and it was my play of the week on Stock Talk Space yesterday. What I was waiting on was it to break through. So I did a Fibonacci retracement from the recent lows back on May to the highs that were hit in November. And basically the 786 level in there came in right around $20. And so once it broke below 20, which is also, I think, was a pretty key level of support, I just was looking for it to fill the rest of this gap down towards 16. So I took $17 puts for February. It broke through that Fibonacci and has just kind of sunk lower. I would be making definitely more money if there wasn't such a high IV on these, but I still think that it has plenty to fall. Okay, I saw Danny's hand up first, and then we'll go to Matt.
Yeah, I closed out my 428 puts for today. So I'm pretty much out of those. I don't have any more SPY puts for the rest of the week. This was kind of my target going into this week. So we're pretty much there. I think what I may do is wait towards the end of the day, maybe around 3 o'clock Eastern, and see where we're at. I might roll some of those profits into like the 426s or maybe the 424s for Wednesday. What Dan was saying, I totally agree with. I think we see some more downside into FOMC, and then that's possibly our relief bounce. I did post a couple of charts. I posted SPY and Qs. This looks more like I had this as an ABC correction. With the gap downs, this looks more like a 1, 2, 3. We're still in wave 3 to the downside. So what we'll generally look for in this point is that relief bounce of a wave 4. That's going to be your counter trend rally, kind of what Dan was talking about. And then what I would be watching for is possibly, and again, it depends on where we bounce from. I would look for a move back up to around 442. That's our 1618 extension to the downside. That might be where wave 4 terminates, where our wave 5 would kick in. And wave 5 for the Qs and for SPY, I think people are not going to like this. It's going to be pretty ugly. So, day by day, we take it day by day and we see where it goes from there. The other two charts I posted was Netflix. Take a look at that Netflix monthly chart. It's really, really ugly. I think Netflix can come down even further. If you look back to 2011, look back to the 2011 Netflix monthly chart. The move looks very, very similar. So, and then the last chart I posted. Thank you. Shout out to TSDR for taking my pick of the week on Sunday because it made me think. Okay, well, what else can I pick? And it really looked at Tesla, and I'm like, I really was kind of bullish Tesla, but with this macro environment that we're having right now, I'm saying Tesla possibly to 600 after earnings. I'm not saying it's going to happen in one fell swoop, but maybe over the next couple of weeks or leading into end of February, early March. I think Tesla between 5 and 600. That's going to be my target zone. That's a 50 to 618% retracement from the May 2019 low. We do have a rising wedge here. It's pretty bearish. It's pretty bearish forming right here. So if we do, I already said it under 900 last week. I said if Tesla closes under 900, that really, really doesn't bode well. It's looking pretty good. We're going to close under 900. So I think we're headed down to 600 here.
Okay, keeping an eye on that. Evan?
Yeah, I did just want to say I was not able to give a pick on the trade of the week spaces last night. I want to put on the record what mine would have been. I was going to say yesterday I don't feel good about it, but I got to continue on the trend that made me win 3 or 4 or whatever it was, and I was shorting Kathy Wood fans. So my play would have been short Robinhood, which is actually looking nice right now. I would have my comment would have been we're down a lot. I don't know how good I feel about it. Was it?
Yeah.
Oh, that's an L. Well, I would have sniped it in before them.
Yeah, probably. Okay. Yeah. Robinhood. I mean, just on that, yeah, that chart is dying. I mean, Robinhood is now down to 11.28, down another 13% today. So I guess that was a pretty good pick. If you go back to IPO, which hard to believe it very recently IPO'd, I mean, it is just below everything. There is just no reason to believe this is not going to continue going down. It IPO'd also at a time where we were getting some very rich multiples that were based on, you know, substantial user growth continuing as well as profitability. They just haven't introduced any new features or anything to really look at. They have a descending 50-day, descending 100-day. They're way below the anchored VWAP from the start. What happened here was a lot of people actually, you know, kind of bought in the last, if you go like maybe 2 weeks back and like another like 4 weeks back, I think people were trying to like buy their like New Year type stuff. And they just, I mean, you can see two decent sized green days on January 11th, January 7th of buying. And I think that those people are just kind of giving up right here. Maybe they got stopped out. They probably put tight stops. Okay, Matt.
I'm making a tweet right now about some key levels on the VIX. We had one of our triggers that we look for, which essentially is one of my most important rules that I have, period, about staying out of the market when it's unusually volatile. There are some key levels. You guys can write this down on VIX futures: 29.65, 29.65. Outside of that band, the VIX becomes unusually unstable. Volatility on the VIX itself, and it's paired with a very near-term call wall at 25 on VXX. So these two things together cause the market to be unusually volatile in a degree that my rule, it's my number one stop rule, actually. It's my don't enter a new position above this band rule. It's to let the market stabilize. I think in the last 10 minutes, we've watched this fall about 30 more points on the S&P. So what I look for is today for snapback trades. So the minute that the volatility on the VIX itself starts to collapse, which is, remember, the volatility is a measurement of the 30-day forward looking window on the SPX itself on those options, but the VIX itself has its own volatility, which almost accelerates the thinness and illiquidity of our market. So if the VIX becomes hedged like it's doing now, the market becomes unusually choppy and thin. Never safe for like day trades. A lot of my traders on my team that like to trade, they like to take these bets that if the volatility does collapse, they usually take longer term options plays on the S&P. Nobody, like, I don't catch any falling knives. I don't buy any dips. But if we do snap below that 29.65 number and stay below it, then that's what causes dead cat bounce squeezes. So these kind of days are always really fun because it's easy to sit out, but it's very, very, very clean to see when the market recovers. So these usually can turn into those wick days that have a green candle, but we don't bet that it does. Obviously, we like to sit out and watch. So those key levels are very dangerous for the market. So just, I'll make a post and I'll pin it up. You guys can see it. But getting that signal on volatility being unusual itself can create problems. There's a whole reason for that, but just keep note of those things. So
are you bearish right now on Qs?
Actually, I'm on the sidelines waiting for it to snap back in the band, and I'm going to go long with something really small, like some micro futures, just to play the volatility. So as the market, I don't think we break through the, let me look at my numbers really quick. On S&P, what I posted earlier, I don't think at all that we break through that level that I drew that arrow on. Personally, I think that today's day trade will be, unusual. It's going to be unusually volatile. So I don't think we fill in the gap at 438-ish today. I think at 435 would be the highest kind of snapback we would see. So, in that range, I think that we're still going to close low, but there could be a wick as high as 435 today. So it's not a terrible, that's a 70-point rip if we do get it. But as far as a day trade only, I'm just looking to play the volatility if the VIX starts to collapse. So there's an unusual trade that takes place in this environment. But outside of that band, it's like such a prominently known thing that in our Discord, people literally scream at each other just to make sure everybody wakes up and knows that it's happening. So this is what I call like my no buy zone, period. Nothing, no stock is even worth it if the index itself is going through what we call a VIX explosion. It's literally what we call it. So this is just one of those massive caution levels for the day. And if you ever trade, I don't know if you guys ever look at the DOM on futures. Normally the S&P, the NASDAQ, we call the SPAS deck for a reason. It's a huge spread. It jumps around all over the place. And the S&P is like the grandpa thing to trade. It kind of moves around nice and slow. And days like this, the S&P looks like the NASDAQ. It's like just flipping all around. So it's not even easy to manage trades. So it's like the whole idea is that you can kind of see from the moment the market opened, everybody can see that the market will be unusually volatile. So it's never fun and never easy, and it's always dangerous. So I'm personally staying out. And when this happens, I know I also don't pick any stocks in the S&P either. Not a single one are worth touching for me today. So again, not trading advice, investment guys to everybody, but I'm the kind of trader that when things are unusually volatile, I like to wait for them to not be, and I like to confirm longs myself. I like to be a long only trader, even when I day trade, as much as possible. So, but that's just kind of where things are going today. Those are unusual volatility is rare. And this is kind of like a once, this type of event only happened, I think, 3 times last year. And these are where you get worried that the market can continue this way. And in COVID, we had these, during that COVID break, we had these kind of volatility band, we call them risk intervals. We had the risk interval break on VIX almost for like a month straight. Every day you woke up to the same thing. So it's one of the things, if you guys hear me on the spaces say, I'm choosing to sit out. This is one of my choosing to sit out technical levels. Like when it does it, I don't want to touch. And it's for good reason. The S&P's fallen, the NASDAQ's down 400 points today. And I know from the minute the market opens to stay on the sidelines. So it's a good indicator, but it's also scary. So just I'll make the post if you guys want to see what my levels are, and just for fun, watch them. See how the market responds to them when it gets there. All right, thanks for letting me speak. I'm gonna mute. I need to do some more stuff, but yeah.
All good, man. Appreciate you chiming in there, Evan.
Yeah, I did just want to hop in and first say we've been going for about an hour here. Big shout out to all the speakers that we have up here. We've kind of turned into a really reoccurring crew on this Good Morning FinTwit Spaces. So just when you're up here, when you're seeing these people speak, just make sure you're clicking into their profiles. Check them out. Give everybody up here a follow, posting such amazing content to their feeds. We're getting some really great information in here. When they sit down and think, as Matt's doing right now, getting that good tweet out, it's just going to be that much better. So just click into their profiles, check out everything that they are doing. And then, Gavin, I actually do believe
I
you might have a question for us. Yeah.
You have 15 freaking spaces this week. How can someone keep track of them? Like, it's almost impossible. Like, you should need a calendar or something like that.
So I actually have 19 spaces this week.
Damn, 19? Like, how can anyone keep track of them? They have jobs, they have work, right? Any easy way to do that?
Yeah, this is the most spaces that we've ever had in a week. Gerg is correct. And because of that, it is more important now than ever to emphasize that we have gone ahead, and the panel up here, myself, Stock Market News, Stock Talk Weekly, our head of marketing, Gavin, have collaborated on a full free Google Calendar with all of our Twitter spaces on it. This thing is churning. I mean, we have 3,500 investors now that are subscribed to this Google Calendar. If you're in the audience and you haven't heard about this before, listen up. We know that you're busy. You've got lives. You got things to be doing. You want to go out here and there. You got work. You got family. But you want to attend these Twitter spaces. I mean, we have so many key Twitter spaces this week. Everything from fundamental and technical analysis. We've got live charting. We've got crypto and NFT taxes. How do they work? Investing in IPOs and SPACs. Investing in oil and energy. Recaps, power hours, financial literacy, investing in cannabis, highlighting top NFT projects, live option trading, and so much more. So how can you find this? You have to be on the Google Calendar. All you have to do to get on it is go right now, my DMs, if you click on the wolf picture up here, or Stock Market News right next to me, click on either one of us. Our DMs are wide open, and all you got to do is just shoot us over your Gmail. Preferably the Gmail. Other emails do work if you don't have one. But just literally click on it, shoot it over, and we'll add you to it within 24 hours, completely free, and just the best service. Like, no more scrolling through your timeline trying to find, when is this person going to post a scheduling tweet? Or, when's this repeating space going to be? Make your life easy. Join the calendar. There are thousands and thousands of people on here, all different types of people. People with 1 million followers have reached out, people who are verified. There's so much going on with it, and we just think so many people have to be on this tool if they're not already. Gerg, any other questions you had on that?
Yeah, so last week, right, Bloomberg did an expose there. They said people that work on Twitter the people who made Twitter Spaces are on there too. Is that true?
It's actually very true. The rumors of Bloomberg expose is confirmed. It was also in Business Insider. And basically, people who work at Twitter Spaces have actually reached out and asked, be honest. We even did a space with one of them last week who was like saying that he loved the calendar. Oh, and I forgot the best feature of all. Now, Twitter lets us record all of our spaces. You can see in the top left the recording button. And how are you going to find the recordings like normally? You're going to scroll through our timeline. Like, look how many times I've tweeted in the last like 2 hours.
Yeah, 53. I'm about to block you to tweet one more.
Yeah, but this is also your way to find.
You guys
recordings.
are so lame with this thing. You guys
We're going into it. We're going into
It's
it.
pretty
I'm leaning
lame.
into
It's
it.
really lame.
It's so
Gavin's got to get
We're
better.
rolling.
Fired
Our
his head of
Gerg,
marketing.
audience has heard this.
Gerg, you
Gerg
got to
comes
get
out every time.
cleaner.
Oh my God, you have so many Twitter spaces.
I know he's got to switch up his thing. The thing is, my
Really?
DMs are getting my stock talk. You say it's lame, but my DMs are getting flooded right now.
No, I mean
So,
I'm just joking with you guys. I mean, like,
you're
it's
rolling
cool.
with it.
Cool.
But yeah,
I
long
mean,
story short,
I could do a
it's your
better
one-stop
promo.
shop. Yeah, stock talk. You're getting the next one. Long story short, it's your one-stop shop for everything
Your
spaces,
stock talk.
recordings.
Did you get me fired from a job?
Stop. Okay. All right, we're moving on to the next topic. Oh, and lastly, of course, make sure that you're following the speakers up here. That way, when they're in a space, you will see it at the top of their timeline. Elite panel up here currently that has been coming back week after week. Definitely, fundamental and technical focus, both up here, momentum, volume, whatever you're looking for. We're trying to bring it up. We had Dan Nathan beforehand. So I literally just sat down this weekend for like an hour and just shot my shot through the DMs to a whole bunch of different people. So hopefully we even have better people coming on. So definitely make sure you're following and you'll see more of these. Okay, Juicy, you came up here. Would love to hear from you how your morning's been going.
Hey, man. Thanks for having me on, as always. So, every weekend I host what's called the Weekend Update, which is like me on Twitter, on Zoom, just going over the charts. And all I was saying was, this is the time to be careful. We got the Fed coming up. We don't know how the market's going to react. So for my top call outs for ABNB short over the weekend, healthcare short, because we're looking at the XLV setting up to pull back. We broke that 128 level. And from there, I was watching Pfizer short, J&J short. Pretty much everything hit. I took ABNB for a decent gain. I actually tried to take Piton on that inside up. That came back and hit me in the face, so I did take a loss there. But I made it back quickly with this NVIDIA short, so I'm pretty much sitting cash right now. I call it letting the market marinate. I want to let the market marinate, some candles to form. I really want some hour and 30-minute closes before I decide to do anything else here. So for me, I'm just waiting. It's a good morning. But right now, like to anybody listening, nimble's the way to go. Every green candle is getting sold off right now. So I really don't recommend trying to buy that bottom. It's more of, just waiting right now because even to the short side, when I see the short side and I want to take it short, I want to see those explosive moves down with volume. And I'm just not getting that volume push to the move to the move down like I like. So right now I'm just sitting on my hands, man. That's the name of the game right now.
Got you, man. Got you. Oh, to the people that are in my DMs, please make sure that your email's in there. Otherwise, I'll just have to DM you back and ask for the email. So that would make my life a lot easier. Thank you. Okay, awesome, Juicy. All right, Hawk, long time no chat. Saw you requesting. What's going on, man? I know he's been chilling out for a bit. Portfolio, Hawk?
He might be sleeping again. Yeah, he's back.
I'm not asleep. Go, Gavin.
I'm
looking at shorting volatility here, but it seems a bit expensive, so I too am on the sidelines.
Okay, very fair. Sofla, what's going on? Making any moves today?
Good morning. Yes, I am. Actually, very ironically, I shorted my long play off of Stock Talk's play of the week. I went short on BA on that 200 injection, but I already sold out. I was just purely day trading this just because right now I'm seeing SPY pretty much try to bottom out at 425, at least for now. So I'm pretty much all out of all my shorts, and I'm being patient for now.
Okay, yep. Awesome. Hey, Matt, any updated thoughts on Lending Club or Danny? I would love to get.
Yep.
So I'm right now in this Lending Club trade. It's been up and down. It's been up 15%. Now it's up 8%. It's kind of moving around. It's trying to form a bottom. Any thoughts right here?
Give me about 1 minute. I'll whip up a chart for it.
Sure. Danny, any thoughts on your end?
Yeah, I'll take a look at it. I mean, it's trying to bounce with the market, with SPY trying to bounce, because it's so oversold right now. you're going to get a little bit of a relief bounce, and you're very extended off of your moving averages. So I would be careful here. Can you see some more downside? Yes. I think best case scenario, you're probably going to trade sideways a little bit, but you might have a reversion back to the mean. So just be careful here.
Okay, keeping my eye on it.
I also see because I was watching LC earlier. I do think from 1885 up to about 1929, it might try to form a little bit of a support in that area. So that's probably why it's struggling to fall, or that's why it's probably bouncing right now. So
I think I'm pretty fine holding this through another day or two at least.
Gab, I just ran it for you. 20. It's straight put pressure from 24, monthly pressure from 23. So I mean, 23 and 24, even 22 itself. I mean, it's falling. There's no. I guess on this one, there's no support, like not at all. So it's going to be pretty stiff. 25 and above is the breakout long target. So anything below 24 is going to be pretty bearish, at least for the next 3 weeks.
Fantastic. If anybody in the crowd has been placing any live trades, again, we do have a thread pinned up top. So you can go ahead and drop into there anything that you've been doing. We would love to take a look at that. I have been following some of the trades that people have been making, and they've been pretty interesting. So again, I think there's 11 things pinned up top now. It's the first one that's pinned up top. So you actually don't have to scroll. You can just click on those dots, I think, and just it'll kind of move you across to the left or the right, whichever way on your phone. Okay, let's continue to take a look here.
Really quick, if you give me a second on Lending Club, just really quick, just to counter what was just said. We have bullish divergence on RSI and MACD, but we also have a daily squeeze to the downside flashing. So getting some mixed signals here. I know we're in this massive gap down to 16, but yeah, just watch that divergence. It's pretty apparent.
Okay, keeping an eye on it. Yeah, I don't want to kind of, FOMO out of this one too soon. I think the setup, kind of leaning into earnings is sitting there, and would love to, just have it fill that gap downwards. Of course, always get bitten. Whichever way you pick, the market will, 75% of the time probably go the other way. But these are the chances that we take, and also I'm keeping it pretty tight. I don't have a stop in place because it's just like a volatile option right now, but just keeping a close eye on it and where it's going. Okay, let's bring it back around. Stock Talk. What are you watching besides the calendar?
Besides the calendar, in terms of like the economic calendar, is that what you're referring to?
No, it's a joke.
Oh, okay. I mean, yeah, it's the same things I was watching about 15 minutes ago when you asked me that. I'm just messing with you, but yeah, I mean, I'm still watching DWAC. I'm watching the Qs more than anything. I'm short on BidF and ARBK, so I covered a little bit of that, but I'm trying to see if they can make a bounce, and then I'll get out of the rest of my puts. But yeah, I'm short Bitcoin miners. I'm short Lucid. I'm short the Qs. And I'm looking to add potentially a DWAC short. And then obviously I have equity that's long in some names that are getting hammered, but just trying to hedge and play the downside as well. I want to make money on both sides. So yeah, I'm just watching for good downside setups. DWAC seems to be sticking to that 67 level. It doesn't want to let it go. So I'm being patient on trying to get an entry on those. But I think if that level, if we get below 65 with volume, it can fall to 61 at least. And so I would like to get inputs there, but again, not rushing anything.
Gerg, are you buying more PLTR down here?
Maybe at $10.
Okay, so just kind of keep riding it.
Yeah, so far, right?
2 months ago, Gerg was saying he was buying it at 20.
I bought him at $20, but at 10 I might buy more. But here I don't care.
Yeah, down she goes. Okay, all right, let's keep it going.
Never ever down. Cough, cough, cough.
Another thing I'm watching. So I actually scaled out of most of my puts that I swung over the weekend. I was in Amazon, and then I took BA for a short today. But I'm watching Amazon again at 2,800 just to see how the buying pressure is. As of right now, selling pressure is way higher. So if the market continues to look bearish, it might be a potential rejection around this 2,800 level. But this year, I think if we drop to 2,400, I might load up on the dip for some long-term investments. We'll see.
Okay, I'm
I
taking
can't
a
lie
look
to
real.
you.
Yeah.
I know with
What's up?
Amazon and this type of stock, like I expect it to go lower and get to that 2,400 point, but like for me, for a long time, I just told myself as a long-term investor, Amazon under 3K, time to buy a little bit more. So I'm fully ready to buy the dip and buy more, buy whatever, but I did add a tiny bit to Amazon last week for the long term.
I'm just waiting for the PE to cool down a little bit. But yeah, no, I feel that. I think overall it might be a little slower this year, and then 2023, if the business goes as it is, I think 2023 will be really, really good for it. We will see.
Taking a look back at the scanner, seeing bearish activity. Oh, more people are bearish on Zoom. Let's see what's going on there. This Zoom chart is also wild if anybody hasn't looked at it. I mean, it's kind of the epitome of the pandemic, but the fact that this thing made it up literally to almost $600 a share is now trading at 142. Continuing to just see, more bearish pressure, almost down 5% today. Like that is one of those wild shorts that you kind of could have just caught there and just kept on riding with. Juicy, did you have anything else you want to throw out there? Any other stuff on your watch list?
Say that one more time, brother.
Anything else you want to throw out there on your watch list today?
For me, I'm just watching. I really want to see if Piton I'm looking for a bounce. To be honest with you, I feel like we're oversold. So if Piton can get back above the highs, I'm looking to see if we can get back into that. I'm all out of A, B, and B. I'm pretty much. I'm just watching, man. Honestly, man, I don't have much confidence in the long side. I just think we consolidate. So I don't want to recommend anybody to try to push that trigger right now. This is that time where you really want to be patient and let stuff close.
Yeah, Peloton, back into the green right now. It was up 6% earlier today, up about 4% now. This thing is, it's not quite at all-time lows. It's still 25% off them, maybe a little bit more than that even, but definitely in a bit of turmoil. For anybody that's taking that, I would definitely just be pretty tight with the stops and the closes and everything. Okay.
Watch Tesla's
What?
above 900 as we're trying to reverse here. Like little quick scalps I'm looking, but nothing really too crazy.
Let's take a look at Tesla. So Tesla right now, yeah, it's pulled back a decent amount. It had dropped all the way to like 854-ish, and now it's back up to 893 and kind of moving in that direction. The 200-day is all the way down at 811, which is kind of what it was streaking towards. Again, that's 1, 2, 3, 4, 5 sessions in a row of red activity for Tesla, and the only green one before that big drop that it had is, not too sizable when it was trying to basically just reclaim 1,000. So it's continuing down there. All right, Evan, any other topics you want to touch on? We can talk about some earnings this week. We talk about some other areas. There just seems to be, the general consensus is we're waiting.
Definitely earnings plus the Fed meeting. Everything's is a crazy week. Quickly, one thing to mention with Peloton. This is the first day it's trading not a part of the QQQ. So that move happened after the close on Friday before the markets open today. So that's just a quick note there. But yeah, this is a pretty crazy week of earnings. This is one of the biggest weeks of the earnings cycle. If anyone maybe has any thoughts or any opinions, obviously a lot of times, real traders will like to let this stuff come out and then play the after effects of it. So I assume that's where we're going to go here. But are there any earnings specifically you guys like the implied volatility or whatever on that you might want to play in? I'll throw that to you to kind of pass around if you want.
Yeah, I mean, I'll throw it over to Danny. I know that you're definitely probably keeping an eye out on some of these. Anything that stands out to you?
What was was there a specific ticker that was asked about?
No, just if there are any specific earnings that you're watching this week for particular setups.
Only Tesla. I think Tesla it's at that key pivot point. If you go back to the wave or the potential wave 3 high back in February of 21, we peaked at around 890. So let me just get the exact number here. We peaked at 940 cents, but that was a wick. I think our bodies closed right around 890. So that's exactly where we are today. And if you notice, I have a wave 4 bottom that came down on December 20th, and that low was $893.39. So there's no coincidence that this is going to be the level that we all have to watch. And unfortunately, it's going to be earnings that are going to dictate which way we go. I was actually just in the process of posting my bullish case for Tesla. Obviously, I posted my bearish case. I think everybody knows what that's going to be, pretty much like 600. But my bullish case, if something extraordinary happens with earnings, they report better than expected numbers, whatever the case be, and I'm not leaning that way, but we have to look on both sides of the trade. Then I think Tesla has potential to go right back up to the highs, but it's got a lot of supply up above, so it's not going to get there anytime soon. But on the flip side, I see a lot less friction to the downside. So for me this week, you know, definitely Tesla, but I'm going to keep an eye on what is it, Microsoft and Apple, I think, that are this week as well. So those are my three top earnings that I'm going to be watching. But Apple and Microsoft, you're not going to see as big of a move in either direction. Tesla is the one that I think is going to give massive, massive moves. So, going to really be keeping a close eye in the next 2 days coming into earnings to see where options traders are positioning themselves. But I think this can go either way. My thesis is to the downside, but of course, want to be prepared for the upside as well.
Perfect. Thank you, Danny. Matt, any earnings on your radar?
Sorry about that. I was muted. Yeah, I was my play of the week last night. I was looking at TXN. I do think, if the S&P and the NASDAQ, these are both areas. NASDAQ at 14,000 today, S&P 43. These are my levels that kind of I was eyeballing from the beginning of the fall. And I think that one of the most depressed, not depressed in a sad sense, but depressed as in a lower price sense, was the semiconductors. I really think that when earnings come around normally, even when we go into normal big tech, Texas Instruments is always the first one of the group. It's always that Tuesday, right? So it's always a gauge of the rest of the industry. And of course, I'm a big fan of the stock itself. I probably do think that a lot of the move that we're seeing right now, a little bit of an exhaustion, like a final liquidation before FOMC. And I think starting probably from this moment, like if there is a bounce that starts from here for 2 or 3 days, just as shorts kind of go to the wayside as well, because I know people are not expecting anything surprising on Wednesday, but any kind of hint, like a waft of a scent of any sort of dovishness, or we're going to gauge the economy and we may not do what we said we're going to do, like anything like that, and the market just jumps straight up. So I think a lot of people on the short side of we've been seeing for a while are also a little worried that they're going to get squeezed, not that the market isn't bearish for a little bit. But so what I think in that sector is that's probably the one that has the most room to move, because I was looking at some of the spreads and some of the options, and in reality, Texas Instruments is something that has the ability to move very quickly. And if all that negativity has been priced in, and right now the market is trying to bet that things are going to get worse, it's been falling since 202, since late last year, and we're kind of like at 175 now. At 190 is very potential, like upside range from here. So that's almost like it's a really large move, but just to show that the spread is that big is really showing how illiquid the market is, even at these lows. So what it really means is that we stretched high, now we've stretched low. So in my long-winded answer is similar, as Danny was showing some his terminology, that's my oversold metric. So it's like we have the ability to have that coin flip go positive or negative just to squeeze. It's not going to turn and reverse the market, but there's enough to have this sector kind of move out of the way of any potential dovishness, because the sector is really sensitive to rate hikes and such. So, if the market really is improving, not the stock market, but the commerce market, and these are the places where I'm going to look as a good sign for other things to turn around. So that's why I think that's probably the play I'm looking at to kind of lead off. And it's kind of like if Texas Instruments is bad, then obviously the rest of the sector is probably going to be in a similar boat. And we have that, I think, tomorrow after market, I think, is their earnings. So
perfect. SoFlo, any earnings on your radar?
Yeah, I'm watching BA and obviously Tesla as well. BA analysts are anticipating a much higher earnings from last time. I forgot the actual number, but That's what I'm going to be watching this week. Obviously, big tech earnings as well. If Amazon doesn't do too hot and we get some more selling pressure, I'm going to be getting ready to buy Amazon a little more. So we shall see. As of right now, I do think we're in a minor bounce territory from SPY being at 425, and if we're talking intraday, I do think SPY is probably going to reject around 430. So I'm just as of right now, I'm being patient. So let's see what earnings brings.
Perfect. And perfect timing. Just as we're talking about earnings, we're talking about the FOMC. We've got our macro session. I think it's a great time to roll into it. And also, big shout out to the several hundred people that are hanging out with us this morning. We've already been running for almost an hour and a half. Please, if you haven't, take a moment to check out these speakers. Extremely knowledgeable in many areas. They've been coming back week after week, rain or shine, good market, bad market, and giving their honest and transparent thoughts and opinions. So highly vouch for them. I'm following them and definitely recommend that you are following them as well. And then if you're liking spaces, myself and my co-hosts up here are the right people for you to be checking out on Twitter. We did 30 plus hours of spaces last week. We've been doing 19 spaces this week, the most that we have ever set up. We even had Twitter Spaces. Their main account was chilling in some of our spaces listening last week. So hopefully we're doing the right thing. Okay, time for macro. Mr. Peter Tuchman, what are you looking forward to this week?
Holy moly. What's up, everybody? Wolf, shout out to you and the team. Love the spaces. Yes, we come back every week because we want to support you. We want to share the knowledge, drop some stuff. And this market is extraordinary. It has gotten my attention, so I am paying attention. Trading Chicks in the house. What's up there, girl? So, look, guys, this is... I was watching Arthur Cashin on CNBC, an old friend. He's been around since the beginning of time. He went to high school with Alexander Hamilton, talking about what he feels about the market and the week, talking about the Fed, talking about Powell, talking about everyone's trying to figure out why the market's doing what it's doing. And, and everyone is clearly everyone has an opinion. One of the things that I did. And me, look, I have no axe to grind. I'm not here to talk about stocks, be your financial advisor, pick the winners, pick the losers. I'm here to try and understand why the market's doing what it's doing and help people not lose money and protect their portfolios and share my 35 years of experience seeing movie after movie after movie and sharing whether I've ever seen this movie before or being forever the student, try and have some humility to understand that, wow, this market is really taking it on the chin. It's fascinating to watch. Why is it actually happening? The market has had a lot thrust on it over the last 2 years, right? The global pandemic. We are seeing, a lot of the negativity that we saw 2 years ago being called up as this is the largest sell streak we've seen since February 2020, the largest sell-off in the Dow since March 2020. We've seen consecutive days now, stocks trading really on 52-week lows. The Russell is down 20% from its high. A lot of the tech sector is getting hit. This morning we came in, we opened, there was a short-term 10-handle bounce, and then we went off the rails. We were down 112 in the S&P at the low. We are 400 points off the low of the day. The market is still young, yet we must ask ourselves, what's going on? What is the catalyst? How do I protect myself? Is this going to continue? What's really causing it and where are people's focuses? So I can only, look, one of the things I did find out today on my reconnaissance, and I search out experience, I search out people who know, I search out the nooks and crannies of the marketplace to try and figure out really, really what's going on. And look, I can give you a million different reasons why this is happening. Why is it happening now that it didn't happen over the last 2 years, right? We've obviously got a pullback in stimulus and whatnot. We've obviously got still a lot of moving parts in the pandemic and the virus going on. We still have earnings that seem a little soft and mushy. We still have the taper coming in at an accelerated rate. We still have, Jay Powell and the Fed chair people talking about, and JP Morgan and Jamie Dimon talking about 4 or 5 interest rate raises into 2022. That's clearly, even though that we've had that on the table for a while, right? For some reason, it's now suddenly getting people's attention and people are responding to it. Obviously, the high growth stocks are going to be impacted by that. But why didn't it happen before? Is it that the market can adapt at one bit of information at a time? And now suddenly we're being inundated with this thing? What is the catalyst to this real breakdown that we're seeing over the last couple of weeks, right? I mean, we are 3 weeks into 2022, right? We are down major percentages. I mean, and look, I don't call this a crash. I call it a sell-off, no doubt, a consolidation, a rotation. A crash is what I think we saw, in '87, in 2007, and during COVID. I think we're seeing, a fracture in the marketplace, some confidence problems. But I think today the most impactful thing that I saw is the fact is that look, and Art Cashin brought it up. People, when markets start to sell off and they break down, and there's a follow through on the downside, people are forced to start selling things not that they want to, that they can, but that they have to, right? I would bet there are a bunch of people sitting at the pawn shop selling their grandmother's necklaces because they don't want to sell their crypto, right? I was on a call this morning with a guy who recently got into Coinbase. He said he bought a couple of, coins and this and that. And within 15 minutes, Coinbase offered him a $100,000 loan against his position in crypto. How many million people do we think out there who were long crypto and went to margin and started leveraging their account when crypto was trading at the 50s and 60s and took loans and bought more crypto and are now leveraged up to kazoo and this morning got a margin call? That is a fact. We're going to hear probably in the next few days about how many million people and how many trillions of dollars got cut out of the crypto world about margin calls this morning. And that's where people, and I was on somebody who has a huge position in crypto, who said they actually are selling their full investment portfolio because of a margin call because they don't want to bail on Bitcoin. I'm baffled by that. I mean, I think the crypto may go a little lower. I'm not sure I would really want to sell my whole investment portfolio to protect. There will be more plays to be had in crypto. But the fact that there's a massive margin call this morning across the board that people are being forced to sell everything and their grandma's necklace is real. I believe that story, and that's why you're seeing the breadth of the sell-off, the acceleration on the downside. Some of these names getting really hit bad, and obviously crypto getting hit really bad. We've not seen this. Now, is that to say that I don't think this could be one of the most great generational buying opportunities in crypto? That is possible too. But I'm not here to make a recommendation about stocks, about the market, about anything and predict anything. The best thing I can say to you is I'm really not sure yet about what the Fed's going to say on Wednesday. Whether they say we're going to actually raise rates right away, whether we're going to accelerate the raise rate, whether we're actually going to take a bit of a pause because of the way the market's selling off, and they may pull back on their fast track on the taper because we've seen an acceleration on the downside in a week that seems to be significant. It's gotten people's attention, guys. So look, there's a lot on the table. There are a lot of moving parts. What I keep saying going forward is, and we're coming into earnings season. Some things have been good. Some things have been a bit mushy at best. The bottom line is, guys, this is not your grandfather's stock market, right? We're not clear about what the news is going to be, and we're not clear about how the market is going to respond to that news, and how all the big players in the game are going to analyze and respond to the news that they're seeing. Everybody has an opinion. There's a lot of people with big money out there. There's some major margin calls and leveraged events going on, right? And so with all those moving parts, I brought it up every week on the space here with Wolf and the boys and the ladies, that trade, if you analyze the way the market has responded to good news and bad news, the way the market's responded to good earnings and bad earnings, the way the market has responded to good guidance and bad guidance, it's not something that I could have predicted. The way the market responded that day that the Fed brought out the news about the taper and about interest rates, we would have thought that would have been the day that would have capped the top of the market. It wasn't. The market went up that day, and that was 4 or 5 Wednesdays ago. The market rallied 700 points on that news. We're seeing stocks come out with great earnings and go down 7%. We're seeing stocks come out with bad earnings and going up 7%. So, guys, there are a lot of moving parts. There is no predictability in this market at all. And, the market's gotten my attention. So that's my spiel on today's early morning action.
Well said, Peter. Thank you for coming up, chiming in, everything that you've been adding to this today. I think we're all kind of following in a lot of what you just said. We're just like looking for like, where's the money going? What are people setting up with? Are we going to see this even further drop? Now the one thing I want to ask you, you're a very technical guy, right? We've now seen the S&P 500 as well as the Qs both close below the 200-day moving average that happened on Thursday and Friday. Seeing that, I expected a huge drop today. I said, we just closed past it. Like, I think we're just going to drop farther. As a very technical-oriented person, what's your opinion now? Now that we've closed below those, do you see that potential for a rather steep drop-off if they're unable to reclaim in the next day or two?
So I tend to try and shy away from making long-term technical predictions in the marketplace. Yes, if you were to ask 1 million people on Friday, the NASDAQ closed below 14,000. Bank of America came out at 3:15 on Friday afternoon and said, if we close below 14,000, watch out below. And they were right. Right? We did see a breakdown in both the S&P 500 and the triple Qs closing below their 200 days. And did we see the sell-off that people predicted relative to that technical breakdown? We have. The market this morning opened down 500 and went down even further. I mean, the Dow never broke below about 550, but the S&P 500 went from down 65 handles. Look, last night at midnight, the market was up 22 handles. This morning, the market was only down 10 handles. Then it was 20 handles. We came in. It opened. It rallied a little bit. It was opened down significantly. It rallied a couple hundred points, and then it really broke down. We are still now, if you look at the S&P, rolling back over, right? So let's look at the S&P 500, guys. We can look at the chart together, right? 432 was about where it traded on the pre-opening. It broke down to 426 on the SPY. It rallied 400 points off that, which is kind of a double bottom if you look at it on the graph at the 426 level, right? It broke above up to 430. It did not break above much. It double topped. Look at that graph. If everyone can just pull up the short graph on the SPY from this morning, opening at 432 level, down to 426, hit it twice, rallied back up above 430, probably got to 430 and 50 cents, double top there, and then broke back down to 428. I mean, we're trading in short technical spaces. Am I able with that information to predict that we're going lower? No, I can't really do that because we're now seeing a lot of more moving parts come into play as the chatter starts around like who's selling, why are they selling, what are they selling, how is crypto. This, I think, what we're seeing here is a real cryptocurrency. As much as I sort of poo-pooed it for the longest time, then I kind of got my attention. I had to really start focus on it, and it's come through a lot of my interest in NFTs and whatnot. Crypto is. We're seeing something happen here that it's almost like a crypto market in a lot of ways, right? That people are selling crypto with abandon, right? Whether, I did get on a call this morning with somebody who said, this market is being manipulated by massive players in the crypto space, whether they are governments around the world or whatnot. There's a fight against the decentralization of currencies. There's manipulation around the globe globally. And that's what we're seeing. We're seeing a manipulation. We're seeing a forced sell-off. We're trying to get rid of a lot of the small guys who are leveraged up the wad, and then they're going to sort of take out the stops and go long, and it's going to be a nice big bounce in the markets, in crypto and everything. You know what, guys? The best thing I can say to you is there's a lot going on that I have not figured out yet, that I don't understand. There are so many moving parts. Right? There's so many moving parts, from the taper in the interest rates, from the way the high growth stocks have been trading. How is the Russell getting hit as bad as it is? What is really going on in crypto? What is really going on in people being margined up to kazoo? A lot of small players. There are a lot of people who made a lot of money over the last 2 years, who are like, have this psychology that they're willing to liquidate their whole investment portfolio to hold on, to pay their margin call, to hold on to crypto. I mean, it's almost like Scientology in a way. And nothing against crypto. I mean, I'm fascinated by the space. But the psychology of that, money's a funny thing, guys, right? And I see it every day. I see it, people, I try to analyze the psychology around day trading, around people, there's people out there who love lost porn. There are people out there who blow up their accounts just out of stubbornness in a bizarre way. Money is real. I want everyone to be successful out here. And so that's why I go on with you guys and I try and share my experience having been in the market and being somebody who has sort of a somewhat of a purity of motive because I'm not in the market myself, right? I have chosen after years and years of being a trader on the floor that, I make a good enough living doing what I do, that I'm not invested in the market. It's a conflict of interest of what I do. So I'm not here to pump and dump anything, and I'm not here to tell you I love this stock or that stock. I also am under major regulation as still being somebody who still trades on the floor. So as an outsider, insider, I am just wildly fascinated about the psychology behind the way people trade, about their opinion about stocks, about what this phenomenon of the new retail trader is, the phenomenon of the cryptocurrencies, the phenomenon of that mentality and psychology of, I'm going to hold this line. I don't give a shit. I'll sell everything in my grandmother's house. I'll mortgage that to hold on to my crypto. I'm just sitting here in awe of the world I'm watching unfold in front of me. I'm on the floor. When you have days like today and you look at those numbers and you see people running around and people, you can see sort of a fear and anxiety in people's faces. They're executing stock. And I don't think I've felt this kind of a breakdown since March 2020.
Wow. And one thing that we pointed out is that it does feel like there's that kind of that fear like since March 2020, but we're, at a much different point in the indices where SPY is only down 10% versus, the significant fall that we saw then. So, well, there is that fear. Why do people, in my opinion, I'm looking at this going, why don't people think it could drop another 10%?
Why do they think it can't?
It seems like a lot of people are expecting the bounce. They're waiting for the, the comeback.
You know what, Gab? There are as many people out there, and I'm here to do the reconnaissance. There is many people out here. Look, a month ago, I got inundated by guys who were talking about, spring is going to be down 20% in the market. And I kind of fluffed that off as saying that's an over-exaggeration. Well, that may be coming to fruition here. I think that if there is many people out there that you ask, it says we have another 10% on the downside, as they said that that we're going to see a bounce here, right? I mean, what I took out from last week was we had 2 up days, we had 1,000-point reversal day, we had a major sell-off on Thursday, and then we saw a major sell-off on. Then we saw on Friday, we saw actually an intraday double reversal. Right? We opened up, we went down 300, we rallied back to positive and up 200, we reversed one more time and then broke down. So we're seeing, this is a function of waves of people with similar sentiment and different sentiment. When you see multiple reversals of hundreds and hundreds of points within a day, well, it's like, okay, now the seller brigade is here. And now, okay, the seller brigade is done. Now the buyer brigade's coming in. So those are people with conviction that the market's going lower. And then you have the bottom feeders hoping for a bounce. There are so many people globally in this market. There's so many people leveraged up the wazoo, right, in crypto. There's so many people with opinions who are managing huge money. Think about if you were, and maybe there are on this call, I know one of my customers is the hedge fund with $400 million in it. I can hear when I get on the phone with them on any given day, the swings in their P&L must be, puke worthy. Not to go dark here with you guys, but it's got to be puke worthy, right? When we trade the SPYs in the end of the day, which is what I do for customers, right? And you're in a trade and the market just keeps breaking down. You're in it for one reason. Yet it keeps breaking down and we're long, and you're not long for 100 points. You're long for 500 points. Those are painful. I know people, there's a lot of pain going on out there. I know people don't necessarily follow, what we teach at Wall Street Global Trading Academy, which is never average into a bad position, right? If a stock, you buy it at 50 and you put in a stop at 49 and it breaks, you're out to the next trade. You don't buy more at 48 and buy more at 42 because that's what's happening, right? And averaging into a bad trade is a recipe for disaster, right? I beg people never to do that. There are millions of opportunities. From a day trading technical analysis perspective, guys, we are seeing incredible opportunities every single day, as long as you follow the rules, right? This is a market where you slice and dice, hit singles and doubles. When you're wrong, get out. If you're wrong 3 times, get out, turn your machines off, go home. I know we were talking with Juicy about it last week. Time is something we can never get back, right? You can come back from one bad day, you can come back from 2 bad days. But if you have 4 winners of $100 and 1 loser of $8,000, you may not be able to come back from that. Not everybody can do that. And then you think you have diamond hands and you turn a really bad averaging into bad day trade and turn it into a swing trade out of a sheer desperation. And then the next day the market's down 900 and your account has blown up. Guys, there are accounts I get calls every day about. I've been trying to get back to even on GameStop from 178 from 2 Thursdays ago, or on this stock or that stock or Wish or UPST or Affirm or whatever. You know what, guys? This market is taking prisoners and ravaging people's accounts. And I got to double back the technical analysis and risk management, guys. This is not, if you're a long-term investor, don't worry about it. We will come back from this, right? We will net by the end of the year. Everything's going to be fine. It's just the way things are. Historically, over time, markets go up. But from a day trade, I would hate somebody missing out on the wonderful gift that volatility is over the next 3 months, because there are opportunities every day, because they got super stubborn and held a bad position, trying to get back to even. They thought something was going to the moon and they averaged into a bad trade and they blew up their account.
Yeah, absolutely. That's the worst part right there. Evan, do you have any questions for Peter before we get Brad involved?
I mean, my first question, I think this week, actually, I was going to say earnings, but I don't think we talked at all about the Fed, and I think that might be a topic we can get a little bit more into. But yeah, so I would love to maybe know your thoughts on anything with the Fed this week, or if you want to take earnings, either one.
No, I'm not. Forget about earnings. It's meaningless. Earnings, guys, you wait for the earnings to come out. You look at the price action. You plug them into your charts. If they set up technically, get involved. Never trade in this kind of a market. Do not trade earnings anticipatorially. That's insanity. Anyway, I'd love to talk about the Fed because this is a fascinating week. We are not, look, you've got, the Fed has been unwinding a story about the taper and the fast track on that, about the interest rate raise and the story about that. The market is finally really, really engaging the potential of what that will mean, the high growth stocks and the market overall and whatnot. Now, where we're at is, though, I'm not sure the Fed anticipated the reaction the market has had. I think a lot of what's going on here is a reaction to what's going on with the Fed. And you'd say to yourself, well, why did it take so long? This story about the taper and the interest rates has been on the menu for 3 or 4 months. What took so long for the market to engage it? Holy shit, excuse my language, right? But it makes sense. Historically, when you fast track a taper and you take your foot off the gas and you stop pouring gasoline on the fire and you start raising interest rates after years and years of zero, it's going to have an impact on the market and the big growth stocks and everything. So we should have seen the writing on the wall. Okay, that's one thing. What's going to happen this week? Well, any number of things can happen, right? There could be they could surprise us with a 1/4 point raise or not. I'm not clear what that will do to the market. They could really scare the shit out of us and just say, you know what, I'm going to do it. It's like jumping into a crypto tank, into a cryo tank, not a crypto tank, a cryo tank, getting into like 300 below zero. It's going to shake your shit up, right? Maybe we'll do a 50 and really let's see. The market will get over it, but let's get it out of the way. Or we're going to do nothing and then the Fed's going to have some wonderful narrative about, wow, so we didn't anticipate the market would engage this in such a negative fashion. Maybe we're going to pull back on this. We're not going to fast track the taper as quick as we thought. We're going to postpone the interest rate raise till a minimum of June, maybe September, and then the market's going to bounce back and it's going to be okay, or it's not. So there are many scenarios that could happen this Wednesday, right? There's no way for me to know what they're going to be. You can think of the most far off wild conspiracy theory that they're going to just shock and awe us on Wednesday, or they're going to actually, as they always say, that their decision making is data based. Well, I think the data since their last meeting is quite significant, right? The last time they chatted, we heard about a fast track and an interest rate raise, right? And the market did the bob and the weave and the kangaroo, right? So, but since then, we've seen a major breakdown in indices, in stocks, in the Russell, and everything over the last 3 weeks since the last meeting. So, are they that hell bent on a data driven based decision that they're going to go, okay, guys, the last 3 weeks have been a bit of a bloodbath. Maybe we spooked the market a little with our fast track story. We're going to, we're going to step back a little bit. Jay Powell does not want to be the guy who crashed the market. So we're going to be a little more patient on this. And I hope everybody's happy with that decision. So, Evan, in answer to your question, there's 5 scenarios I could present you with. And I really am not sure how the market would respond to any of them.
Perfect. Thank you, Peter. Yeah, so that's a really interesting take. And I guess it just kind of shows us, kind of sometimes have to just be very calculated if you're going into any positions. We constantly tell people not to trade based off earnings, right? We wait until we have that confirmation from the FOMC. Like, we'll probably be live during that FOMC call, and we'll just wait to see what direction the market starts going in before we play it, right? Wait for confirmation, Peter, right?
100%, guys. This whatever happens on Wednesday, which could be something big or something small, or more information or less information, or pedal to the metal, or pulling your foot off the gas, it's going to be significant. There are a lot of people with built-in positions around their opinions about what happens Wednesday. I promise you, whatever happens, we are going to see a market go up 400, down 400, 3 or 4 times before it settles itself into a directionality. There's nothing to say that the next day, like it happened last time, the reaction was wild and crazy for a half an hour after the meeting, and then the next day there was a big follow through on the downside. I'm not telling you all what to do. I would not be taking a position into a trade based on what I think they're going to say or how I think the market's going to react to it. I would let it happen. Like I say to you about earnings, this market is wild, guys. The moves in stocks are absolutely wild. This is not a market where if you're wrong for $1. This is a market where you're wrong for $10. And I don't know about you, but I can't handle a $10 loss on any kind of a position. That is painful. That's puke-worthy shit, guys. Okay? So I would be patient. Let the Fed come out. This will be significant, whatever happens. It's going to be significant, and I would let it happen. Let the market shake it out. Let the amateurs hit their buttons. I always call this as like gorillas in pajamas hitting buttons, guys. Let everybody trade off their opinion around what happens. Let it settle down. Plug your technicals in. Put it in your chart, whether you're trading SPY, Qs, stocks, individual names around the Fed or what you think, and then trade strictly on technicals. And I beg of you, every trade you get in, put in a stop order. Use a bracket. What an amazing gift the market gave us with bracket orders, right? Guys, you can know where your downside risk is. You can take, because the moves are going to be fast and furious. You can be in and out. You don't want to use a mental stop. There'll be plenty of opportunity. If it goes against you, get out short term, get into something.
Perfect. Thank you, Peter. Okay, Brad, I want to get you involved as well. But Peter, again, big thank you. If everyone's not following Peter, 35 years of experience on Wall Street, trading from New York Stock Exchange, the life of the New York Stock Exchange. So a great follow. Thank you for coming on, Peter.
Thank you.
Okay, Brad, what's going on by you today?
Yeah, just a lot more of the same that we've had to kind of palette and experience over the last few months. So just before I get into it, time horizon for me is much different. Very, very much so a long-term investor and hoping to hold companies for a very long time, as long as performance continues to warrant that conviction and that holding. So really for me, it's been about just slowly inching my way into these positions that are doing the things that they need to do, that I talk about all the time, to profitably compound over the long term, and are experiencing this multiple compression and enhancing this long-term risk reward. So inching into names and continuing to do so this morning, but doing so slowly and respecting the fact that there is a lot of this macroeconomic volatility and there is a lot of this fear. And although I'm looking at some of these names and scratching my head on how how they're trading at 30% below market multiples and growing far in excess of the market with better margins and more margin upside. I don't know where the bottom is. I don't know how irrational we can get on some of these names. So I'm not going from 14.5% cash to 0% cash today. I'm going from 14.5% cash to 14% cash today because I am taking advantage of this risk reward, but I'm also respecting the fact that there's a lot of stuff going on that I cannot control and that I cannot predict and that I cannot foresee. And like Peter was talking about, but in more of a long-term investing frame of mind, it's reacting to these headlines. It's reacting to all this stuff that's coming out instead of trying to forecast it, so that if I am wrong, and I could be wrong, that we're not at the bottom, and I don't know where the bottom is. So I should say I don't think we're at a bottom. I think panic is certainly setting to set, and is certainly starting to set in markets, but I don't know where the bottom is. And if I decide to go from 14.5% to 0% today, if things go down 15% or 20% again tomorrow, I'm not excited. I'm not licking my chops. I'm upset and I'm nervous and I'm panicking. So as much as this is about not attempting to time a bottom and respecting markets and knowing that I can't bottom tick, it's also about controlling my own emotions and my own sanity. So having this 14% cash position as for lack of a better term, shit is hitting the fan, is an extreme comfort factor for me. It's an extreme. I almost want to call it a secret weapon, because I can look at an upstart that's now gone from $400 a share to, I think it's at like $80 a share today, and look at my cost basis around $115, and I'm now in the red, and go and think to myself, well, because I keep a large cash position, and because I inch my way into names and not all at once, I can now take advantage of this, and I am taking advantage of it because I'm still very much so a long-term upstart bull, and I will argue with whoever wants to argue about it until I'm exhausted. But long story short, continuing to put cash to work, but continuing to do so like a turtle, like a sloth, like the slowest animals you can possibly think of, because there is all of this going on right now that can impact my companies, that are exogenous factors that my companies can't impact themselves. So that's really what I've been doing. Not super different over the last few weeks. Really enjoyed listening to Peter. I'm bummed that I messed up and was a little bit late to this Spaces event, but thank you for having me, and see you at 3 too.
So where's that 0.5% cash going today?
Yeah, so I'm really focused on right now. I'm focused on the 30%. Well, most of my companies are these 25, 30+% growers, but I'm really focused on those companies that have established and growing bases of EBITDA, that have that E in the price to earnings multiple, so that I can look at them and say, well, in a really favorable macroeconomic environment, maybe 15 times gross profit was favorable, but what gross profit multiple is favorable in this environment? So it's looking at these names and saying, okay, Microsoft and Apple and Amazon and all these names are trading around 30, 35 times earnings. And now I have an upstart trading at 25 times earnings, or the earnings that I think it's going to do. And then a good RX trading at 35 times earnings, and then a Progeny trading around 35, 40 times earnings. And all of these names are compounding at above a 30% clip. So it's really focusing on sinking my teeth into these hyper growers that I think are being indiscriminately swept up in the selling, that have fantastic unit economics and profitability and expanding margins and that E in the price to earnings ratio. So that's really where the focus has been.
Is earnings the most common multiple that you're using?
No. So for really young companies, I generally use I do use gross profit multiples, because I mean, when you have a company like Lemonade that's investing all of their gross profit into new market share and into more growth, it's not even doable to calculate. They don't even have EBITDA. It's a 5-year-old company. So I talk about multiples that I use in terms of kind of like graduation. So when there's a gross profit and nothing else, I use that. I never use sales multiples. Sales multiples just completely and entirely ignore the quality of a margin profile and the unit economics of a company. So sales multiples are not really my favorite. But as a company maybe has positive operating cash flow or EBITDA or something like that, then I graduate from gross profit to an EBITDA multiple. That happened with SoFi, to give an example. And then as that company matures more and more, and then they start to put positive net income down on the income statement. I graduate to net income and free cash flow, and in those multiples that I'm using for a PayPal or for a Facebook, or for companies or metaverse, I should call it, or a company like that. So it's really, in an ideal world, if they're growing and far enough along on their profit curve and growth curve where they are dropping enough money down to the bottom line, where they're not just inflecting right. Okay, so if a company is doing is just inflecting positively to net income, and they're doing 2 or 3 cents in net income, the price to earnings ratio will look like 2 or 3 or 4,000. But I mean, that's because you're essentially dividing by zero. So it's really, when that net income scales enough, or moving up the income statement, when that EBITDA scales enough, is when I graduate and move further down the income statement on which margin lines I'm using. But yeah, that was probably a longer answer than you were looking for, but hopefully that was clear.
I don't like the self-doubt, man. I want all your answers exactly like you want to give them.
Well, I have
Evan.
20 more minutes then on that one topic if you'd like to.
Perfect. Let's
No,
roll.
I'm talked out.
Evan, you got any questions for Brad?
Yeah, I'm excited for this long-term investing space we have coming Thursday at noon. We're probably going to do 1 or 2 more weeks of doing these deep dives into stocks. So far, we've heard Progenity and SoFi from Brad. I would love to maybe kind of get a little bit of sneak peek if he has any ones that he's done research into very recently and wants to talk about or anything like that.
Yeah, so I think I'm going to talk about GoodRx on Thursday. So that's one of the names that is in that hyper growth bucket, or not really hyper growth. They've been a very consistent compounder at around 30%. But I think I'm going to talk about GoodRx. They're going to do, so based on where they're trading right now, like 44, 45 times earnings, so a little bit heftier than market multiples, but really favorable growth, and just a market share leader in a market where leading could be extremely lucrative. So how deeply do you want me to how long do you want me to talk about GoodRx right now? Because I could go on for a
As
long
deep
time.
as you can go.
Sorry, what, Kirk?
As deep as you can go.
We'll keep it at surface level now, so we can get the full deep thing in. I don't know, 1 to 2 minutes on it.
We're probably going to start wrap up after that.
Totally get it. So I'll go really surface level product suite. GoodRx essentially leans on the cash businesses that pharmacy benefits managers, PBMs, use to offer lower prices on drugs through its program. It has the largest base of PBMs in the country by a wide margin. It has the best pricing on drugs in the country by a wide margin. It then used the massive scale that it built from this core product to enter the pharmaceutical, or the branded pharmaceutical space, for which it uses its 20 million monthly active users, which it attracted through these low prices, to market the discount programs that these branded drug manufacturers offer, which only 3% of Americans who are eligible for at the moment are currently know about. So there's very little awareness. So my mind's on Upstart because of that price movement. But GoodRx is really leaning on its scale and leveraging it's leaning on its scale to create a pure margin business within this pharmaceutical manufacturer segment, because it's really not spending on anything besides day-to-day operations with supporting the main product. Now, the other product that I'll talk about, and it's already been 2 minutes, so be super quick, is GoodRx Care. It's telehealth product. It takes my favorite approach within telehealth. I do own some Teladoc, but the investment case is wildly different there. They're really focused on point of care solutions for low cost prescription drugs. As you can kind of assume, some of the people that come to their site don't have prescriptions in hands. They send them to GoodRx Care to get the prescription and come back. Now, GoodRx is not trying to profit off of this. Telehealth is wildly competitive, commoditized, however you want to slice it. The take rates and the margins will probably compress going forward. And knowing this, GoodRx really uses it as a cost-neutral marketing vehicle. They sell all these services at cost to cross-sell for the rest of their products. So, I mean, in a commoditized world, how you win is in price. And because GoodRx isn't attempting to claim any of the variable profit that they need within this segment, they're able to upsell and generate that wonderful lifetime value LTV through all of these other products, and do so that way. So they're really able to compete in telehealth without really needing to build a sustainable, successful business within there. So really like the approach of using it as a marketing vehicle to feed these other extremely high margin businesses that they have. 65% of the GoodRx Care visits that they have end up cross-selling in some form of filling a prescription or signing up for a subscription or something like that. And that was 5 minutes. And I'm at the very beginning of the first chapter, so I'm going to force myself to stop talking right now so that we can wrap up. And I don't talk until noon. But yeah, I'll talk a lot about it on Thursday.
One question on that: are you going to talk about the potential competitor that Cuban just launched?
Yeah. So I will talk about Cuban's competitor. I think Amazon's is probably a more kind of formidable player to talk about at this point in time. I will say there have been so many of these startup endeavors that have tried to mimic and mirror the value proposition that GoodRx has, and really they lack the scale to attract the PBM network. It's kind of a chicken and the egg argument. GoodRx had years before the competition realized what was going on to build this massive scale, and they now have 15 PBMs. And how do you really convince 15 PBMs to join your platform if you don't have any scale? So I think I'm at this point more concerned about the Amazon competitive threat, just because of how new this Cuban endeavor is. But even Amazon, I mean, they have a few hundred, not a few 100,000. They have a few hundred monthly active users for their Prime RX card, which is competing with GoodRx. So there's really been no dent to the competitive moat, which it's not a. I probably shouldn't call it a competitive mode at this point. It's too young of a company, and there's too much to prove left. But in terms of their competitive sustainability, there's been really no signs of any competitor really taking a meaningful dent in the market. And it's also an $800 billion market. So there's definitely probably going to be a lot of winners. The other winner right now, and not sort of a winner, but I guess you can call Single Care, who's their largest competitor at this point, sort of a winner. But GoodRx, I mean, the pricing is so much better. The scale is so much larger. The profit margins are so much better. Yeah, it's just they're pretty far ahead of second place in the market. But Cuban and Amazon and Single Care and all these endeavors all have to be taken seriously, obviously. So we will for sure talk about that.
Perfect. Yeah, I actually saw somebody use it for the first time in real life about a week ago. I went in at a Walgreens, and it was literally just like the commercials. The person was like, "Here, I'm picking up this prescription," and the guy behind the counter was like, "Oh, do you know the price of this? Did they tell you?" And they were like, "Oh, don't worry, I'm using GoodRx." And he's like, "Oh, let me look that up for you." And it was like, "What the fuck? Like, this is literally the commercial."
Thank you for the free marketing for my company, and Wolf, I appreciate it.
Yeah, it was wild. Okay, one more time. If you've been in here, we've had several hundred people in here. We've run over 2 hours now. We've done we've done long term, short term, macro, micro. We've done live trades. I don't know if anybody else took it with me, but I took the only trade that I took today was LC short. Took that when it was down around 6%, maybe like 5%. Now it's that short's up about 15%. The puts. So those I took February 18th, $17 puts, hoping for it to, or not hoping, but aiming for it to close that gap downwards towards the 16 level through earnings on Wednesday. So that is a swing for me. I'm trying not to look at the position too much and just kind of letting it roll. We've had some really good commentary from a number of different sides. So Matt, weighed in with the hedging pressure from both sides. We had Juicy and Danny coming in from more technical perspective, Stock Talk talking from the momentum and volume, as well as mixing technicals and fundamentals, Gerg on the fundamental side, and more. So we've had even other speakers up here this morning. Because we do want to give people an ample time for any closing comments and wrap up, we are going to go into that now. Please make sure that you are following the speakers, as we continue to roll through this. We are going to be doing, again, 17 more spaces this week, covering every major investment topic. So anything that you're searching for, you're in the right place, under the right umbrella.
17?
Yeah, 17.
Okay, someone keep track of them, like it's possible. Any easier way to do that?
Ask and you shall receive. The easiest way to keep track of all of our spaces is our free calendar. If you simply go and DM either myself, Stock Market News, we are co-hosting up here. Feel free to just go ahead and shoot us over any email, preferably a Gmail, and we'll add you to a free public Google Calendar. We have now 3,500 people following all of our spaces. It is the simplest way to not see just the time when we're going to do spaces, but also who is speaking, what the topic is. It is also your one-stop shop to find recordings for our spaces. And yes, people from Twitter Spaces, hedge fund managers, CEOs, and so many more have all subscribed to this calendar. It is an amazing tool. I already have dozens of DMs to get through after we are done this. So I'm pretty excited to get those people onto our calendar so they can see all of our spaces again. Everything's in my pin tweet as well. You can go and click into my profile right now and take a look. I recommend just like while you're listening to wrap ups, take a look at my pin tweet, see what stands out to you. Feel free to throw it on your calendar. But if you want to make your life easy, just shoot me over your Gmail. I'll add you to it, and you can just toggle that on and off. So that way you have just one quick look at everything on your calendar, and you can stay organized. Stock market news. Anything you want to add to that?
Yeah, all I wanted to add is that me and Gav, myself and Gav have been talking a lot this week about last couple of weeks about stuff we can do to improve the already amazing and impeccable Google Spaces calendar. We have some really cool ideas coming, some really great things that will help you all not only know when stuff is going to be going live, but also kind of reading what happened after, being able to listen to it after in a much easier way. So we're working on some stuff, got some cool ideas going on in the background. This is 100% one of the best things that we've created, and it's only going to get better. So I'm super excited. Definitely something you guys got to be on. But yeah.
We're also going to be like living on these spaces. I think we fully adapted. I mean, just during this space alone, I took my dog for a walk. I made breakfast and ate breakfast, like in between bites of moderation. I've been DMing, like everything's been going on. So thank you to the kind words from the audience. Some people send us really nice messages along with those DMs. It does mean a lot. Again, our goal is educate tens of thousands, if not hundreds of thousands of people for free by bringing the experts on every one of these topics into these free spaces and just pelting them with questions. Like myself and Evan, we just love asking the questions. We'll give our opinion here and there, but for the most part, we just love asking. Okay, with that being said, let's roll in to some wrap-ups, just any closing thoughts. Viking Lord, I see you requesting too. I did shoot you a DM if you want to respond to that. This is more of a stock focus space. So I did have some of my NFT and crypto people that were requesting, but I kind of asked them to just make sure that the topic lined up. Okay, with that being said, Danny, would you like to go first with any closing thoughts?
Sure. Just really simple. I don't need to harp on this. I mean, just be patient. Just be patient. The market is going to continue to go down until we get further guidance on Wednesday. And like Peter said, it's going to really depend on what they say. If they push taper off and interest rate rises off until later in the year, then the market bounces. If they're neutral, then we have to see where we go. If they're hawkish and they want to raise rates or they're continuing on the path that they want to go, then we're going to continue to see more downside. Do I see a relief bounce in the near future? Yes. Do I think we're going to continue to head down? Yes. Will the stock market go over the long term go up? Yes. So you have to understand what your place is in this market. But regardless, you just need to be patient. If you can day trade, then this is potentially a good market to take quick trades on. If you're a swing trader, then you just need to sit on your hands and be patient. You have to understand where your capabilities are in this market. Respect those capabilities and don't try and do more than what your capabilities dictate. But also, this is a really good market to learn. This is not going to be like the early COVID crash where you saw a V-shaped recovery. At least I don't think it will be. If that does happen again, I'd be really, really surprised, but highly doubt it. So just understand the nature of the market. Continue to learn, put your learning cap on, take notes, because years from now we'll have a similar situation arise, and you can think back and say, well, I remember where I was during the correction in 2022, and this looks really familiar, and you'll have some skin in the game and some knowledge on that move that we're seeing here. So just be patient. There are greener days on the horizon. It might be a week from now, a month from now, 6 months from now. We just don't know. We just have to take it day by day and be patient. Have a great day, everyone. See you all later.
Thank you, Danny. Awesome stuff, Matt.
Man, it's hard to follow that. Those are some good words of wisdom. This is the environment where you learn what you're made of as a trader. And most people got into trading this round. When I got into trading was during the first financial crisis, and I remember a similar feeling, right? People getting into the market, it's nice and bullish, hard to pick a loser. Everyone's a winner. Everyone's an expert, right? This is where the real wisdom starts to shine through all the noise. This is the time for you guys to learn something. These spaces are filled with people who've been around the block. To us, this is our second bull market that's looking to tip over, right? I've been in the game since 2010, so I'm seeing it a second time, and I remember what it was like when I was a new trader. And if you guys are new traders out there, a lot of what I've seen, and we help as much as we can, and a lot of what's out there, especially in social media or anything else, is a lot of the blind leading the blind. A few good months in the market and everyone thinks someone's an expert after a few good calls. And real wisdom comes through with understanding why things happen. No one can predict the stock market, but understanding that what people have said today. I mean, everything Peter said was just fire. I mean, he was literally screaming while pounding his fist on the table to literally burn these things into your head. This is the time that you can't mess around. These days are account killer days. These days are, you get one shot, and this was your shot, and you lost it because you're just, you have to be careful. There's just no way around it. And and then of course with Danny saying the same thing, this is the time that you need to learn. And these spaces, they're free. You can come here every time we do them. Gavin Wolf, you guys have been doing such a tremendous service for the community. This is needed now more than ever for people to be here and experience the wisdom of these traders and what they have to say. Obviously, nothing is financial advice or investment decisions. But whenever you see things like, and not going to make fun or poke fun of anybody that's bag holding any stock that may be crashing right now or have been crashing all year. No comments on AMC there, but you may be in a boat where people in a boat like that, misery loves company, right? And people form clubs to kind of support bias. This is a club to support education. That's what makes these spaces different. You're here to learn something. You're not here to be around other people to support not learning so that you can feel better about a bad position you're in. Here's a place for you to learn how trading works, how markets work, and all of these people are wonderful. Follow every single one of them. I'm out, guys. I'm taking it easy. Sit out of the market today, but y'all have a wonderful day.
Thank you, Matt. Completely agree with you there. Yeah, we do try to, it's not always what we want to hear. Like sometimes we ask about a stock and it's certainly not a toxic positivity type environment, I would say. Just trying to keep it real, give people's honest thoughts. Plenty of stocks out there that I agree have gotten, completely hammered and still seem to, get a lot of optimism. But in a lot of our spaces, especially the more technical ones, when a chart's broken, like we'll say that, like that chart is broken. That's a downtrend. Why are you buying that? So very well put. Okay, Juicy, you on here? Any closing thoughts?
It won't let me. You hear me now?
Yeah.
Yeah, sorry, but it wouldn't let me unmute. But yeah, just going into the day, this is definitely a trade your plan kind of environment. You definitely want to come in with a straight structure of a play until we get the Fed. So I'm gonna keep it short and sweet, man. If it's not lining up, don't trade it. Don't force any trades. A big part of your job is to be patient and look at how you've done, year to date. Me and my team are green year to date. So it's like every time I'm looking at a trade, I'm saying to myself, is this really worth me risking profits on? And I can't say yes to a lot of these trades. So I'm more nimble. I'm in and out. I'm scaling out quicker. I usually scale out like my first scales at like 40%. Now I'm 20%. I'm out, right? I'm taking a lot of times. I'm taking a whole lot at 20%. I'm not trying to be a hero here. I'm just trying to tread water until we can get some direction in the market. But again, follow all the speakers here. Love being up here with you guys, and thanks for having me on.
Absolutely. Thank you for coming on, Juicy. Okay, Brad, any closing thoughts?
I don't think I have anything left interesting to add. Just really enjoyed listening to everyone speak. It's fun to hear different approaches to the market, and yeah, really just to hear a collage of philosophies and how they all kind of relate and connect. And so enjoy listening to all you guys as always, and talk to you in a few hours.
Perfect. Yo, Gerg, what am I buying next? I don't know. Home Depot is looking a little bit stable.
Yeah,
Too stable.
whatever Gavin, no, yeah, the product. I mean, the day you bought your iPhone, that was top for Apple. So if you go to Home Depot, I will go short Home Depot. This is my entire portfolio. So
I'll let you all know what I purchase next. Yeah, literally,
can you go and watch a movie in AMC so we all can short that?
Yeah, I suppose I can make my way over to
Did you see AMC though right now? 15%.
I'll probably have to be hosting a space though while I watch the movie, because I don't think I have any free time this week.
Bro, AMC down 16% on the day.
Yeah, good thing you're XXX leverage long.
No, quadruple leverage as well.
There we go. Gerg, any closing thoughts?
For me, right, in this market, do your due diligence. Don't buy anything just for someone random on Twitter about that. So if you do your research, you make your own thesis, have conviction, you wouldn't sell during downturns, right? Because on average, every single year, SPY tends to pull back 10%. So if you have conviction and you own good companies, you wouldn't be selling anything. You would be buying here. So do your research, know what you own. Don't buy crap just because someone's pumping it on Twitter. So
Perfect. All right. Let us know if you buy any more PLTR.
maybe at $10.
Okay. Keeping an eye on it.
Are
Okay.
you long Palantir?
I am long Palantir
Is that your
currently.
biggest position now? What's your biggest holding right now?
That's a good question. Let's see. So, going into this whole downturn, my biggest positions were Square and SE. Those have been pretty significantly cut, obviously. Let's see, Square
But don't look at Square
still.
right now. For the
I
day,
know,
don't
I
look at
know.
Square.
I
That,
should.
that
Okay,
was
Celsius might be my biggest right now, but that's because I got in pretty early. But unfortunately, obviously now it's taken quite the hit. But yeah, Celsius I think is my biggest position. Well, that's not true. Bitcoin's my biggest position, so there's that.
that's down even more. Yeah,
I know.
For me,
I'm
right,
taking
my
it.
biggest crypto is CRO and USDC. So
Oh, well, actually, then I should say my biggest position is technically USD coin, which I'm staking. So,
yep, 14% a year, no risk. Shout out to the DeFi platforms.
I just staked another $1,000 during this call in Terra at 19.56%. So that's.
But for me, right, it's a bit too complicated to go through a third party.
I
For
literally
me,
explained it word for word on Twitter
no,
Spaces last week. It was recorded.
It was, but for me, right, the crypto.com platform, I have the car too, right? I have crypto staking there. I have super channel there. So all of my crypto assets and all of the different things with crypto are linked into one. So for me,
I hear,
it's
man.
way
I hear, man.
easier.
If 5.5% is worth the convenience,
So for
do it.
me, right, I can move the money right away, like with the different crypto platforms.
I completely understand. The card is valuable. Yeah, liquidity is valuable. Getting stuff in and out. I won't go down this rabbit hole though. Not for this
Yep.
case, but another one. But
You
yes,
should
there's a
do
lot of
one more this week.
opportunities. There's a lot of opportunities out there besides the stock market. That's I think where we're getting at. Okay, Stock Talk Weekly. What's going on, man?
Oh, well, I mean, I just put a trade in my Discord. For the guys that are on Discord, they probably saw it. We took DWAC puts, the $60 puts, bought them at $2. They're trading pretty much at 4 now. So that was a nice trade, little 100% trade there. I sold about 25% of them kind of early, but I'm scaling out as usual. I don't try to get greedy with options. But I expected this thing to be able to trade down to 61. We're pretty close to there now. So that trade worked out well. We got a nice flush in that on weakness in the Qs. But I'm not going to be itching to make too many other trades today if I don't see anything else. But that one just worked out for us. So, yeah, DWAC short worked nicely.
You called that perfectly. You've been literally sitting here since the beginning of this going, I'm looking at DWAC, I'm looking at a short, but I'm waiting, and you let it break through. And
I rarely
it.
catch bottoms on those intraday options plays, but I mean, I entered at 2, which was like the absolute bottom today. And so that was a really nice entry. But yeah, I mean, that's partially luck. I didn't know exactly when it was going to swing. I just knew that the 6750 level was really important, and it kind of hesitated there this morning. Tried to give it up, so had some bids, and so I was watching it kind of frolic. And, I typically don't take intraday options day trades, at least until an hour into open. And that's specifically when we got the flush. We started getting that flush at 9:40 a.m., which was, an hour and 10 minutes into open. So just, happened to time it really well on the entry. But it was a weakening chart. And I know that this stock's up a lot on thin air and hype. And those are the types of stocks that suffer a lot during drawdowns like this. So yeah, just worked out well.
Perfectly done. Okay. All right. And stock market news. Any closing thoughts from yourself?
Yeah, I mean, overall, my perspective is definitely a little bit different, closer to Brad's than a lot of the other speakers up here. I'm much more of a long-term investor. When I see these dips and when I see this type of stuff happening, I do tend to get a little bit excited, and not when just stocks are going down, but when the whole market is going down, it starts to create opportunities in specific areas that shouldn't be going down. So this market-wide selling does make me excited. Do I think we're at a bottom? No. Did I buy a tiny bit on Friday and a tiny bit during this call? Yeah. For me, from my perspective, first of all, you really have to not just buy a stock and do the research when you buy it, but be constantly reassuring that the stocks you are buying the dip on or dollar cost averaging into are really worth that for the long term. And from my perspective, you really have to be doing it slow and just, buy in small amounts. And that's really where I'm at right now. I added a little bit to Amazon, Airbnb, PayPal, and Disney during this call. Tiny amounts. I am prepared to buy lower. I have a decent amount of cash on the sidelines right now to put to work, and I'm going to slowly do that. For the average long-term investor out there, we are on Twitter. I recognize that. You tend to be the people who want to pick individual stocks, who are more active, everything like that. But for the average person, long-term investing just wants to be in the market and wants to make money. Dollar cost averaging, buying slowly into ETFs, mutual fund indexes that aren't like, I'm going to go all into this one sector ETF and just throw like 5 different versions of that. Market-wide ETFs that really cover broad-based things, SPY, QQQ, IWM, etc. If you like the Dow, you can do that. But yeah, so for that type of person, I told my friends who aren't really much in the market, the people who, my family, whatever, hey, now is a good time to DCA a tiny bit into some of your funds. I expect to buy lower, but yeah. So, there's a common tongue or whatever, when markets are going up, that stocks only go up. It's not true. The stock market tends to only go up. And what that really means is like the SPY, the QQQ, these major indexes that change and are fluid over time, that, take out the bad stocks and replace them with better, newer stocks, and it continually pushes it higher. Stock indexes are really meant to go up over time. And I still have faith on the 5 to 10 year time horizon that they will. So we're in correction territory. To me, I told some of my friends who are just in that perspective, expect to buy lower. But if you're that long-term investor, you have to be putting at least a tiny, tiny bit to work. And buying the dip doesn't mean sprinting out at the first sign of a 5% correction and spending all your money. It means going in slowly over time and expecting to buy lower. That's enough with that. I see Brad has his hand up. I'll let you get in there with that, and then I'll come back for whatever I got.
Yeah.
What's up, Brad?
Super quick. So 2 people DM me asking about Progenity. So there's a company called Progenity, which I do not own, which is PROG. And then the company that I really like is Progeny, which is PGNY. They're both in healthcare. So of course they have the same name and very similar tickers. And of course, and so I get how that's confusing, but yeah, Progeny is the company that I own, PGNY, not Progenity, PROG.
Yeah, PROG
Yeah, I
is
said that wrong
garbage
earlier
and
in the call.
whatnot, but the Brad one is pretty good. So
Hey, thanks, man.
Yeah, I've definitely said that wrong every single time. So that's on me, but shout out for you to coming in and giving us that great explanation last week, and excited to hear the good RX one this week. Make sure you're following all the speakers up here. I know we've been talking that a little bit, but just make sure you're doing it. Actually click in. All such amazing content. And the real truth of it, I've been saying this a bunch. The unfollow button is free, easy to hit, and we won't know. So you can always do that. It's a super easy option. You're not going to want to unfollow any of these people. They have all amazing content, but it is there, and there's nothing for you to go in and check out what they're doing. Myself, Gav, Stock Talk, Brad, anyone else, Gerg, Danny, are all welcome on the space that we have later. We have a 3 p.m. power hour space. We do have a nice crew on there, so it might get a little bit like this one, but I expect a really great spaces then that's going to be hosted from the Bullish Rippers account, that green raccoon that's up here. So make sure you're following them, check them out. I tweet from that account. Gob has hosted a bunch of spaces from that account. I'm hosting some as well. But we're really getting a great combo over there. So it's definitely a must follow in my definitely biased opinion. But I appreciate you, Gav, Wolf, for putting this on as always. And big shout out to all my speakers for coming in and making this a great space. The Good Morning FinTwit is one of the biggest ones each week, and I love it. Thank you all.
This one, 100%. This one was very exciting. We ran about 2.5 hours. Adventurous Day, we had 3,000 to 4,000 people that came through here. We had a lot of different speakers, all the ones that are up here. Dan Nathan was on for a bit. Like Evan mentioned, there is another space that we'll be doing at Power Hour, so that's 3 p.m. EST. You'll see a bunch of these speakers, plus some other ones. Exclusive will be on there, PB Investing, Sarge. Catherine Ross will be tuning in about 30 minutes in. And then I'll have a third space today, which is also going to be at 6:30 p.m. EST. We'll be talking about some financial literacy with Decade Investor and your friend Andy, if anybody's seen his stuff. And then it really just heats up for the rest of the week. 4 spaces tomorrow, 5 spaces Wednesday, 4 spaces Thursday. Just going to be laying into it. Again, if you haven't already taken a look, click into my profile, take a look at my pinned tweet. That will lay out all the times, all the speakers. I would definitely say keep a lookout for tomorrow morning. I'll be going live at 9 a.m. EST with exclusive, doing live option trading. And then at 12 p.m. EST, I'm going to have a regular weekly panel with Brian Shannon, Jake Wajastik, Danny, Ben from Powder Profits, and Evan. And we'll be doing live technical analysis and charting. We'll be taking dozens of names from the audience and just charting them out there live, giving opinions on the charts. This one has been super helpful. That space has allowed me to, get out of some positions that were just, the chart was completely broken there, and some other areas. Again, for actual positions today, Stock Talk took that DWAC trade downwards, which I think he's edged mostly out of. We didn't give a ton of others. That LC play is still doing pretty good. It's now up 25%. May move to take some profit on that. Not trying to get too greedy in this market, although I really do want to hold it as a swing. So, still a little bit of contemplation to go there. And I think that that's pretty much going to do it. So we'll see you all in about 3 hours. Thank you so much, everybody who tuned in. You all make this absolutely worth it. And we have a great time hanging out with you. All right, everybody. Take care. Wishing you all, green in one direction or the other. Play upside, play downside. Do what your heart, brain, and community guides you towards. Okay. Take care, everybody.